20 years' time, those kinds of AIs are set loose on the open web in, a reckless way, then I can imagine that probably causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies, and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. It's been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, some of those areas the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, these smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that, the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to, really shut them out or prevent them from being, able to manufacture anything if it's something good, useful, that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting up even higher as time goes on with each administration, and they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. That it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition, so how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point, but it's like, that's probably not really the case, and people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's
That's
not
right.
the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools. Whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now, China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Stocks swing as markets brace for the U.S. payrolls report and a possible Supreme Court ruling on U.S. President Donald Trump's reciprocal tariffs. Rio Tinto and Glencore resuming talks to create what could become the world's biggest mining company with a combined market value of more than $200 billion. And investors continue to digest U.S. moves on Venezuela, with nearly 20 oil executives set to meet President Trump later today to discuss what's next for the country's energy sector. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Lots to talk about on the show today. Geopolitical developments in Venezuela over here in the region as well. We're going to talk about Yemen too. But then also big day for markets. A couple of things on investors' radars today. We got the U.S. payrolls report, so let's watch out for that. Obviously, if it's a weak one, then perhaps you could start seeing more rate cuts priced into the U.S. curve. And then we also, in theory, we should be getting the Supreme Court ruling on Trump's reciprocal tariffs and whether they are deemed legal or not. And if they aren't, then the Trump administration could be due for refunds to many companies that were already charged the tariff rates. So something to think about there, and it could have actually macro implications as well. So that's happening later today. As for where things stand this morning, Asia Pacific slightly more positive handover this morning, up to 0.2%, so marginally more positive towards the end of the week. S&P futures not doing a whole lot, still shy of 7,000, but close to all-time highs here too. So trading sideways into these two big events happening later today. Brent, we have seen recovery. Remember, it was just a couple of days ago we were trading through $60 to the downside. A lot of focus on Venezuela, the potential for oil and the ramp up in supply out of Venezuela potentially in the next few years, in addition to a theoretical breakthrough with Ukraine and Russia. But on top of that, I would say geopolitical premium very high on the agenda as well. And keep a close eye. We touched on this yesterday on the show, but keep a close eye on the demonstrations happening in Iran too, because that's been happening locally in the region, not getting a lot of attention, but the demonstrations are beginning to grow. So something to think about as it pertains to oil too. And then gold, you see slipping a little bit, down 0.2%. We have spoken a lot about the rally up in gold and silver, especially towards the last couple of months of the year. But I would say the last few days we've seen a slight pullback because there's an index rebalancing going on. And so some of this weakness is actually technical weakness because of those index rebalancings. Switching over, and this is a theme that seems to be coming up with domestic policy with Trump, more of a focus now on housing affordability. And here, he seems to be placing it at the forefront of his agenda going into midterms. And I just wanted to flag that the spread between MBS and Treasuries is actually quite tight. So look at the white line there. It's been trending tighter and tighter and tighter. So that spread is very tight. But keep an eye out on nominal yields in general, and the fact that, you know, a rising economy, an economy that's doing well, will boost yields upwards. Okay, let's also check in on home markets in Asia. Frank, Winnie Su is in our Hong Kong studio. Winnie.
Morning, Jomana. As you just mentioned, we're seeing MSCI Asia here marginally higher, but we're headed for the best first full week of trading since 2023. And yes, we're closely watching that potential Supreme Court ruling when it comes to Trump's tariff, and that's likely going to provide some tailwind for the exporters in our region. And hence, you're seeing exporter-heavy Japanese stocks here leading gains, also supported by a weaker yen and also strong earnings from fast retailing. But at the same time, when you take a look at Kospi, it's actually up for 6 days already. And we've also got breaking news crossing the wire that South Korea plans to start its 24-hour onshore FX trading starting this July. And that is also part of the step to boost its capital markets reform. Now, you flip a word and take a look at what's going on in China as we've got key economic data coming out from the country with CPI and PPI data here, both slightly surprising to the upside, but not so much. In terms of CPI data, it's actually driven by the food cost. And when it comes to PPI data here, down 1.9% year over year, slightly better than the estimate of 2% decline. So that is showing that there is some effort when it comes to anti-involution kicking in. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. Interesting inflation figures coming through from China this morning. For once, actually seeing a surprise to the upside. Well, switching over to the U.S. now, Federal Reserve Governor Stephen Miron says he is looking for 150 basis points of interest rate cuts this year to boost the labor market. He also said underlying inflation is likely running at 2.3%, which means that Fed officials do have room to cut further.
I'm unsurprisingly the lowest dot. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation.
For more market insights, Brett McGonigal, CEO of Capital Link, is here with us. Happy New Year to you. So let's pick up on these Stephen Miron comments. How much of a driver
doing or saying. I think when we look at it, I've always been a critic of the Fed. I think that they're behind the curve, and we've spoken about this many times. I agree, there's many more cuts to come, and I think it's going to drive kind of the next bull market leg in the United States. If you look at, you take the politics out, you take posturing out.
Yeah.
Look at Chinese rates, look at U.S. rates. Chinese rates are 250 basis points lower than U.S. rates. How do you have the G2 world of two countries that dominate global trade be that polar opposite in monetary policy? Doesn't make any sense to me.
Why do you think the Fed have been lagging or behind the curve, as you say, to use your term?
Well, so I would say the last year or so, I think is largely political. I would say before that, I just think that the system that they're using.
The political in that they are putting up a fight against President Trump?
Yeah, so I don't know if it's necessarily that aggressive, but I think that there's a tendency and a hesitancy for them to really look at the underlying market. I think it's more the dot plots and the stuff that they're doing, where they've gotten away from actually looking at where the real sentiment and the real drivers in the U.S. economy are. Most of the job creation's at the lower end of the spectrum. It just doesn't really make sense. I do think there's a political part to it,
Okay.
but I think that before the political play, they're just behind the curve. I think it's an antiquated system.
Yeah, it's interesting because when I was reading all the sort of 2026 economic outlooks from various analysts and sell-side research, people still think this is going to be a positive year for the U.S. economy and for U.S. growth. So how can the Fed be undergoing an aggressive easing cycle when the U.S. economy is still growing north of 2.5%?
So I think that if you look at really what's driving the U.S. economy, and you get the tariffs out of the way, and you look at where the U.S. base economy is, it's really being driven by a handful of companies. And if you take AI away from it, I really don't know how you can baseline any sort of aggressive strength in the market. I think you would say it's kind of bumping along the bottom. So it doesn't make much sense to say that when you're cutting rates, you're going to have some real vicious rally because you would portend that the market, the underlying economy is not that strong. What I think is it's being masked. There's a lot of masking agents going on. There is some sort of inflation that comes through from the tariffs, but underneath the market, we need a broadening out, and we need the U.S. economy needs to broaden out, not just the market. And I think that's what will happen if you get rates down, you get private enterprise, small, medium enterprise back at the table, and you kind of get the last leg of this, kind of baseline to move forward.
And it's a big year for politics, domestic politics. The midterms are coming up. And even President Trump, I think a couple of days ago, he said, if we don't win the midterms, I might get impeached, right? So he's very laser focused on this.
And look at what he's
the
doing.
stakes are high. The stakes are high, of course. But I think we're also getting a better understanding of what his domestic policy agenda is going to look like with housing affordability.
Yep.
He's really been hammering that message the last couple of days, and defense as
Yep.
well.
And
So
don't
do you see these as an opportunity?
I think let's start with the first driver is next week Davos, right? I don't think it's a coincidence that all these multilateral relationships have been withdrawn from a week before you get onto the European stage. Right? Davos is not necessarily the cheering section for the United States. So he's walking into a meeting in an interview or speech a week from now where he's just dislocated the last kind of connection points to the multilaterals, right? Trump is not a multilateral guy, right? He's unilateral in every way he looks at things. So I think you have that going on. But what I think is most important is the defensive side and the rotation of defensive stocks. It's largely a short-term endeavor. We've seen that the market just kind of gets buoyed by the big mega caps. And until something changes that, I think you're just going to have these asset allocations into defensive stocks for a period of time. I think it's short-lived, and then the momentum changes and everybody starts to chase again. And I think it's a boring story, but it just keeps kind of rolling over and replaying.
And yet with that, I guess people want to be positioned in places like precious metals, like gold and like silver, with the massive spike that we saw towards the end of the year. And then also some of these key transition metals as well, the likes of copper and aluminum.
Yeah, so I wrote in the notes about silver. The rhetoric around silver just makes me laugh. Silver all of a sudden is a bubble. It's it's a short squeeze. It has no fundamental reason for it to be there. So I would ask anyone that kind of makes commentary on stocks, isn't the Magnificent Seven, isn't it all of that all in one times 100? I mean, how we say that these stocks in NVIDIA puts on $3 trillion of market cap in a year, and that's not extended, but all of a sudden silver's extended? I mean, silver's a base metal that's been used for centuries,
Yeah.
right? It's not a GPU play, it's not a modern theme, it doesn't have a thematic that has to play out overnight. So I just think it's funny how the prognosticators position some of these the themes that all of a sudden silver is a runaway train at 70. I think Citibank put a $300 price target on it yesterday.
Right.
So I'm not a silver guy, but I want to say that I think you have to kind of take away some of the thought process in the headlines and look at the underlying. If silver is a runaway train and everyone says it's going to come down 50%, what happens to Magnificent Seven? Like, I think we got to be careful of what we wish for.
Yeah, it's a fair question. But that so far, the earnings growth is there. But I guess the question for this year is whether it holds up. Brett, always good to chat to you. Thanks for coming on the show. I will be at Davos, so we'll see what President Trump comes out with in Davos in a couple of weeks. Brett McGonigal, CEO of Capital Link. Thank you. Now for a look at some of the other stories we're following today. Nearly 20 oil executives are slated to meet President Trump at the White House later today as the administration pushes them to help rebuild Venezuela's battered energy sector. Sources say execs from companies including Chevron, Exxon, Vitol, and Trafigura plan to attend the meeting. Reviving Venezuela's oil industry could cost up to $100 billion over the next decade. President Trump is directing Fannie Mae and Freddie Mac to purchase $200 billion in mortgage loans, his latest effort to bring down housing costs ahead of the November midterm elections. Trump announced the move in a social media post, saying it will drive mortgage rates down and make the cost of owning a home more affordable. China is said to be planning to approve some imports of NVIDIA's H200 chips as soon as this quarter. Sources told Bloomberg that Beijing is preparing to allow local companies to buy the components from NVIDIA for select commercial use. The H200 chip, however, will not be used for the military, sensitive government agencies, critical infrastructure, and state-owned enterprises due to security concerns. White House Trade Advisor Peter Navarro says U.S. industrial breakthroughs will eliminate China's market dominance in rare earths. Beijing's efforts to withhold supplies of critical minerals last year helped fuel a trade war with the U.S. But Navarro told us that American innovation will boost domestic production.
The China relationship is a very difficult one. China has been flexing its muscles now in Europe and India and the United States, saying basically, we're going to do what we want, and if you try to stop us, we're going to take away your critical minerals, because they think they have a monopoly on it. But that's just a matter of time. American innovation is going to quickly wipe away that innovation, that threat, that weaponization.
And you can listen to the full conversation between Michelle Hussein and Peter Navarro by searching for The Michelle Hussein Show wherever you get your podcasts. And coming up, Rio Tinto has resumed talks to buy Glencore in a deal that would create the world's largest mining company. The latest on the mega merger next.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that some crypto has?
Bloomberg is covering all things crypto.
A pretty spectacular story.
This is the future. This is the 21st
cards. We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Horizons Middle East and Africa. I'm Shimona Versace in Dubai. Rio Tinto is resuming talks to buy Glencore in a deal which would create the world's biggest mining company. Big news today in the mining space. Let's bring in our metals and mining reporter, Martin Ritchie, who joins us from Shanghai. Martin, so there were talks between Glencore and Rio in 2024. They were put on hold. It seems as though the story has come to the forefront again. What do we know about the potential underpinning of what a deal could look like?
At the moment, we don't know a lot other than the fact that the two companies have started talking again. That's already been confirmed, and as you said, they did come together for discussions about a merger back in 2024, which didn't come to anything. We've had sort of 2+ years of lots of deal-making activities, some of which has come to fruition, such as Anglo combining with Teck, some of which hasn't, such as BHP trying to take over Anglo. So there's a lot of activity in the mining space. For this deal, one of the key complications is coal, around coal. Glencore being one of the world's biggest coal suppliers, but Rio having already exited the fossil fuel. So they'll have to come to some kind of arrangement what happens there, whether it be perhaps a spin-off before the deal or a restructuring afterwards. But this deal is very much focused on, as a lot of the transactions or potential transactions have been focused on copper. The miners want a piece of action on copper, given all the demand that's coming from renewable energies and the energy transition.
Well, I was quite literally going to ask about that. The crown jewel, I would say, of Glencore is copper, and we've been commenting on the fact that it soared through $13,000 in the last couple of weeks. Would you say that that is perhaps one of the main attractions for Rio?
I think that the kind of record high copper prices we've seen certainly lends a very appropriate backdrop to this kind of deal. For years, people have been talking about copper prices going to these kind of very high levels because there's not enough supply in the world, and that's been motivating the miners to really try and come up with deals, to try and combine themselves in ways that give them more copper exposure and gives them the ability to invest more for the future in mining. Having said that, there's kind of very sort of specific reasons why copper is rallying at the moment. It's ahead of potential US import tariffs, which means people are rushing copper to America to try and get there before Trump announces anything. So, it's still a very positive metal, but we saw Goldman this morning, for example, saying that they expect a correction in the copper price later this year once all that kind of fluff comes out of the market.
Yeah. So copper, but then also, as you say, one of the hurdles to cross is the fact that, and this is in the article that you and the team have written, Glencore is the world's biggest coal shipper. So something to bear in mind if this deal goes ahead. Martin Ritchie, Bloomberg's metals and mining reporter. Thank you so much. Well, coming up, Zambia pushes for a new IMF deal with elections looming. We'll bring you that story next. This is Bloomberg.
Farm Fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your Opening Trade.
Only on Bloomberg. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Zambia says it will seek a new loan program with the IMF. Its current deal expires this month. The government says it wants negotiations concluded as quickly as possible. With elections looming later this year, our Chief Africa correspondent Jennifer Zabasaja joins us from London. First of all, is this announcement by Zambia a surprise? How common is it for countries to ask for a new type of program as their current program comes to an end into an election?
Right, Jumana, there's quite a lot of factors there, as you were just rightly pointing out. Over the past year, we have been paying attention to a lot of the staff level meetings that Zambia was having with the IMF. So the expectation was potentially that we would see an extension, though the fact that we are seeing potentially the aspirations to restart a new program in an election year is a bit surprising. And I think you just take a look at some of the other countries, potentially the precedent that we have seen. There's not very many. If you look at the past decade, one example is Ireland, also Portugal. And we should point out that the election in Zambia is midway through the year, about midway through the year. It's in August. Though, if we talk about the realistic nature of which whether we'll actually see a new program, I think you should just take a look at potentially some of the meetings that we had seen prior to this initial announcement and some of the descriptions that we were getting from the IMF about the current state of Zambia. So just the latest, we had heard the IMF saying that the country had restored macroeconomic stability and built buffers that have improved economic resilience to shocks. So it was seeming like with this initial program that they were in talks with, there seemed to be some consensus about at least the trajectory that the country and the economy was headed in. Potentially that gets them closer to securing a new program. But of course, as you and
Can we get some good examples of analog monitors that are capable of DVR for around $100 that Bardwell would actually use? I have to tell you,
it might be quite difficult for
This was submitted by Ayana, a student of my art school program. Let's see if we can improve this. The colors are great here, but there are some small anatomy issues with the face, and the bright background can be a bit darker to help add some overall contrast to the values and make the character pop. So let's first have the nose pointing to the right, like the rest of her face. Her left eye is also a bit too far left because her overall face is too wide, so let's move that a bit and reshape that profile, and already that looks much better. Her red eyelashes look too much like makeup though, and need a bit of volume as well, so let's redo it and paint some eyelashes real quick. And finally, we can adjust the lighting in her face to match the spherical shape of her head and tweak the green light reflections to follow the volumes of her clothes better. Did it help? Follow for more and click the link in my profile to check out my art program. This was submitted by Ayana, a student of...
We have seen a lot of strength in the economy, especially considering some of the prices and the upswing that we have seen in copper prices. If you take a look just at exports of copper for Zambia, they account for about 70% of revenue. And so, as you were mentioning, there are quite a bit of tailwinds. And I was doing an internship with Clear Sky, right? And the cats were like, Toby comes in my room, he's like, what do I do? He runs away, and then Applejack's running. Are saying that potentially it would help keep state spending in check, and potentially it could help boost investor confidence if we do in fact see in the run-up to the election
more election spend. Though definitely helping to buoy prices for the economy are these copper prices that we've seen over the past few months, and it's continuing to help stabilize and even stabilize, the economy in Zambia.
Yeah, interesting. Jennifer Zavasanja, our chief Africa correspondent, bringing us up to speed the latest with Zambia. Well, coming up, precious metals, as we just spoke about, have been a key support for the rand also so far this year. We'll speak to Casey Sprague, market strategist at AG Capital, and whether those gains are sustainable. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets,
From the micro to the macro,
covering retail, entertainment, the business of sports.
the supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld,
And I'm Romaine Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Ahmed in Bangkok. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks swing as markets brace for the U.S. payrolls report and a possible Supreme Court ruling on U.S. President Donald Trump's reciprocal tariffs. Rio Tinto and Glencore resuming talks to create what could become the world's biggest mining company with a combined market value of more than $200 billion. And investors continue to digest U.S. moves on Venezuela with nearly 20 oil executives set to meet President Trump later today to discuss what is next for the country's energy sector. It's just on 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai, and later today, two signposts we're watching out for. Number one, payrolls report. Obviously, a big focus for investors now that we're back on track again with the timing and the schedule of these reports. But then also the Supreme Court ruling on Trump's reciprocal tariffs, and if they do end up being rescinded, that could have macroeconomic implications. Potentially could lift yields higher and potentially also a tailwind for stocks too. So something to bear in mind. Could be two major market moving events later today. As for the handover, mostly positive from Asia Pacific. futures trading sideways. Brent also seeing a bit of a recovery the last couple of days, up 62, back to 62 and a half, up 0.7%. At one point, we were trading through $60 to the downside. Again, a lot of focus on fundamentals this year, but as well, keep an eye on the uptick in geopolitical premium too, not just with Venezuela, but with those demonstrations in Iran as well, something to think about. And then gold, we are sitting shy of $4,500. We're down 0.2%. There's some index rebalancing going through for gold and silver, which is putting downward pressure on the precious metals the last couple of days. And then switching over, we spoke about this earlier on the show, but I do just want to highlight that it seems as though one of the focuses for President Trump into the midterm elections is housing affordability and making houses more affordable for American consumers and home buyers. And here is what the market is telling you. The actual spread, though, between mortgage-backed securities and U.S. Treasuries, that white line, has been trending tighter and tighter and tighter. And so he could try to bring that spread in a little bit more. It might be challenging, but ultimately, maybe what he really needs to be targeting here are yields. And if you're in an environment where inflation premium is rising or fiscal premium is rising, then that's going to put some pressure on long end yields. And then it becomes a matter of the nominal yield as opposed to the spread between Treasuries and MBS. So again, something to think about. But the latest was his directive to planning studies to buy $1 billion worth of MBS securities. Okay, let's also check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie, walk us through the handover.
Yeah, so with the MSCI Asia just marginally higher today, we are really waiting for that potential ruling from the Supreme Court around U.S. tariffs. And like you mentioned, it can provide some tailwind for exporters in our region if the tariffs are ruled unlawful. And hence, you're seeing exporter heavy Japan Nikkei 225 here leading gains of 1.5%, also supported by a weak yen that's now hovering around 157 against the dollar, as well as the better earnings from fast retailing that was helped by a recovery in its Chinese business. CSI 300 here, the onshore China benchmark up 0.3%. We got the economic data from China showing that CPI a bit of a rebound due to the food cost, but also PPI coming slightly better than expectation, driven by the anti-involution efforts. Now you flip the board and we stay with China, but we take a look at a key listing today, which is Minimax here, a first day debut in Hong Kong, up now 80%. And this is still really that AI topic, and the company is one of China's biggest Gen AI startups, and also one of the first China's Gen AI startup to go public, and has a lot of attention, also because it's backed by Alibaba and Abu Dhabi's sovereign wealth fund. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. South Africa's rand has been on a strong run, with markets showing little sign of stress despite the currency trading near multi-year highs. The rally has been buoyed by record high precious metal prices and improving investor sentiment, after economic reforms are rewarded with a credit rating upgrade from S&P in November last year. Investors are increasingly looking ahead and weighing whether those supports can keep the currency resilient amid a shifting geopolitical backdrop. Joining us now is Casey Sprague, market strategist at AG Capital, and our chief Africa correspondent, Jennifer Zabazaja, will also join the conversation. Good morning to you, Casey. There's so much I want to talk to you about, but I'm going to start with the current geopolitical environment, because geopolitics have once again been thrust to the floor at the start of 2026. And I'm not obviously just talking about Venezuela, but the fact that the stance out of the Trump administration seems to be a lot more hawkish. You know, over December, there were airstrikes even on Nigeria. He's been very critical of South Africa domestic policy and leadership as well. What is the setup going into this year vis-a-vis geopolitics, and specifically the Trump administration's approach to the continent right now?
Yeah, good morning. And I think South Africa really finds itself in a very difficult place at the moment. For a relatively small country and economy, politically, we've always punched above the weight slightly in the geopolitical space. But over the last year or so, we find ourselves increasingly at odds with the Trump administration at this point. I think ideologically, the two countries are as far apart as ever. So how that is going to play through now in 2026 is the big question across financial markets in South Africa and investors alike. And in this increasingly geo-fragmented space, I think the continent as a whole has got a lot of questions to ask for itself as well.
Yeah. Earlier on in the show, I don't know if you heard, but I was having a chat to Jennifer about Zambia, and then also the fact that Zambia do stand to benefit from rising copper prices. They are obviously not the only country in Africa that are going to be benefiting from the rise in metals. How do you see this as a potential economic tailwind into 2026?
Oh no, it's fantastic, and I think that will be the key story for South Africa. I mean, at the moment, our terms of trade are the strongest they have been in a very, very long time. Bear in mind, South Africa is a mostly exporting nation, particularly within the commodity space. Gold prices at the moment are record highs. It's been fantastic. It's helped bolster the rand in that as well. I mean, I think just even towards the end of last year, South African, the local currency, has had its strongest year since 2009 and appreciated around 12% against the US dollar. So we really have, for some time, already been receiving that commodity boom.
Casey, this is Jennifer here in London. As Shimano was just alluding to there, we have seen some positive tailwinds for South Africa vis-a-vis the FATF grey list being removed from that. We also got the credit rating upgrade late in 2025. Do you think markets have fully priced in some of those positive indicators for the South African economy, or are some investors potentially still sitting on the sidelines a bit?
I think some investors are sitting in the sidelines. South Africa's economy has unfortunately been in the doldrums for some time. It's been a long time since I've been able to speak very, positively around the outlook. So things are improving. As you mentioned, we received a much-needed investment upgrade. Unfortunately, South Africa is still regarded within junk territory, but we are moving upwards and onwards, I would say. More importantly, we came off the FATF grey lists last year as well. So that's really adding to the positive momentum. But I think more importantly, it's South Africa's reform story that's really starting to gain traction now. Our strong push towards fiscal consolidation. But unfortunately for investors, we need to see numbers across the board first before they catch those tailwinds too quickly. So I believe, some investors are on the sidelines waiting to see can we carry this momentum throughout 2026.
How much of, we mentioned, of course, you did allude to the fact that, of course, this has been a difficult time for the relationship between South Africa and the U.S. But if we take a look at the U.S. and what we are seeing, at least from the central bank there, and potentially what we will see, could there potentially be some upside in the equity market, or even for the rand, if we do see rates continue if we see a bit of a dovish central bank Federal Reserve in 2026?
Well, definitely, I think that's also the key stories at the moment. The interest rate differential between the US and South Africa is widening at this point. Obviously, seeing the direction that the Fed is going, at this point, we are pricing in that the Fed will probably cut more than maybe what markets are anticipating at this point, depending, of course, on who replaces Jerome Powell at the end of the day. But yes, that will add a further boon to the South African rand. I mean, at the moment, we are around 16.50 mark to the US dollar. We believe we've got room to strengthen a bit more towards the 16 handle, bar any major geopolitical shocks as well, which at this point is difficult to foretell.
Of course. What other asset classes then, Casey, are you watching closely as it pertains to South Africa and even just sub-Saharan Africa more broadly that could experience some tailwinds heading into 2026?
I think if we look specifically at South Africa first, the local bond market had an extremely strong year last year, but I think a lot of that sort of positive momentum and strength in there has largely been sort of priced in by markets already. So I think it'll be hard to for investors to lock any more profits in that space. What we're getting really excited about at the moment is within the sort of local equity space. And again, that's been a very long time since they've been able to be more positive around SA Inc. But if you look at the JSE All Share, I mean, that had a smash of the year last year. I think it's increased by around 38.5%. So that's, it's been a really strong year. And we see a lot of that momentum sort of carrying through towards this year. For Africa at large, I believe, again, as a space for African equities. On the bond market, it depends very much which country you're looking at. You mentioned earlier, of course, Zambia is a great example. It's got its own idiosyncrasies at the moment. But I think at large, within the emerging market complex, Africa is starting to slowly stand out, especially if you look across the geopolitical space. A lot of questions around South America, barring the situation around Venezuela, if there's going to be sort of some level of contagion effect there. So I think Africa is starting to slowly but surely attract attention for all the right reasons, especially when you're starting to see the sort of strong fiscal drive we're seeing across the economies.
Yeah, so interesting. After a strong performance last year as well for the Johannesburg Stock Exchange. Casey Sprayton, market strategist at AG Capital, and Jennifer Sabataja, our chief asset correspondent. Thank you. Well, coming up, Saudi Arabia's push to end UAE's role in Yemen. We discuss relations between the two Gulf powerhouses next. This is Bloomberg.
Korean.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
Stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Oh my god.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Saudi Arabia is moving to end the UAE's role in Yemen and diminish its influence in other areas. That's including its role in the Red Sea. As tensions rise between the two Gulf powerhouses, the Saudi-led coalition is also claiming the UAE has helped Yemen separatist leader Idris al-Zubaydi escape to Abu Dhabi. Dana Khresh, Bloomberg UAE bureau chief, joins me now to help us understand exactly what's been happening on the ground. So just walk us through the events in Yemen and how it's led to this moment, Dana.
Morning, Jumana. So for now, we're seeing reversal of gains, right? So the Southern Transitional Council, which seized Hadramaut and Al-Muhra last month and kicked out Saudi-backed forces from it, and that's of course how this crisis all happened, have now lost these strategic provinces, especially Hadramaut, which is near the border with Saudi, and it's Yemen's largest province. Now, what we saw is that the Saudi-backed forces there, which is of course part of the internationally recognized government, and the Saudi-led coalition used their jets to strike positions and help those advance against the FTC. So the FTC is the separatist group in Yemen that seeks autonomy, but mind you, they're all part of this governing body. It's called the Presidential Council, and they're supposed to continue combating the Iran-backed Houthi rebels that have, of course, seized Sana'a back in 2014 and are still very much strong. And we've seen what they did in the Red Sea in cutting shipping lane and cutting shipper routes, of course, and disrupting shipping. But more than that, the Saudis have accused the UAE of being behind that FTC attack, of arming local factions there, and asked the UAE to withdraw its forces. And that's what the UAE did. It issued a statement saying, we're going to do just that, and quote, withdrawing on its own volition, and said it was unfortunate that the Saudis were dragging its name into the conflict there. But what we also saw that the Saudis, didn't stop there. This week, the head of the SEC, who was supposed to travel to Riyadh for talks to end the crisis, never boarded the plane, and the Saudis accused the Emiratis of helping him flee to Abu Dhabi. Now, we couldn't verify this information, and the UAE has not yet commented on that. The UAE has been quiet since the last statement from the defense ministry saying that it has completed its withdrawal from Yemen. So on the ground right now, what we're saying is that the Saudi-backed forces have retaken those strategic areas, and they are trying to kind of consolidate people outside of the STC's head and Zubaydi to bring them to Saudi and try to resolve the crisis within that governing body under the Saudi umbrella.
Thank you for breaking it all down for us and giving us the context.
That's no back view.
What is the state of UAE and Saudi relations right now?
These are two major Gulf powerhouses and U.S. allies, oil-rich, and naturally they want to expand their influence and be kind of the go-to power player in the region. That's just natural. As of now, despite this escalation that we've seen in the past 2 weeks from the Saudi side, it's hard to say there is a diplomatic crisis. We saw that Saudi sent a new consul general to Dubai, and that was received by a deputy in the UAE foreign ministry. So they have appointed a new one instead of just they could have let it go. But there is not yet a severing of ties. This what could mean, of course, is exacerbating the situation in Yemen. First, the humanitarian situation, and we've seen that deteriorate heavily, and from the UN reports that there is food scarcity there, and of course the Israeli strikes and the U.S. strikes on Houthi rebels have actually also worsened that situation. It could maybe embolden the Houthis even more than just standing or watching what's been unfolding in areas under the control of the Saudi-led coalition. So it could embolden the Houthis, and it could definitely exacerbate the conflict in Yemen that's been going on for 15 years now. But on this side, on the side of diplomatic relations, the fact that they brought the consul general, the consul general to Dubai and appointed a new one, it means maybe they just want to kind of keep it intact. And we've seen some perhaps mediation efforts from the Qataris or Omanis. We've seen phone calls, but nothing concrete about severing of diplomatic ties. So this is where we stand right now.
Dana, thank you so much. Dana Khleish, Bloomberg's UAE bureau chief. Now for a look at some of the other stories we're following. Turkish Foreign Minister Hakan Fidan says clashes between Syrian government forces and the Kurdish-led Syrian Democratic Forces in Aleppo justify concerns about the group. Fidan is accusing the SDF of, quote, turning into a tool for Israel's divide and rule policy, and has called on the group to leave aside what he described as terror and separatism. Meanwhile, the Syrian government says it has announced a ceasefire in Aleppo. Israel says efforts to disarm Hezbollah are far from sufficient after Lebanon says it has now disarmed militias in the south. The Lebanese army says it has achieved the first phase of a strategy to disarm all militias on its soil, demobilizing the area between the Litani River and the Israeli border. U.S. Ambassador to Israel Mike Huckabee said in an interview, Israel must protect itself against Hezbollah when asked whether a large-scale military operation in Lebanon is expected. Protests in Iran escalated significantly overnight amid an internet blackout as thousands appeared to take to the streets across the country, including the capital, Tehran. Human rights news agency says the death toll in the state crackdown on the protests has risen to 42 people. President Trump said in an interview with Fox News he has, quote, put Iran on notice.
But I have put Iran on notice that if they start shooting at them, these people are totally unarmed people. And they love their country. They want something to happen. Look at their country. They've gone back 150 years. But I've told them that if they do anything bad to these people, we're going to hit them very hard.
And coming up, security guarantees for Ukraine are a key sticking point as President Trump seeks to broker a peace deal to end Russia's war. We'll bring you the latest next. This is Bloomberg.
the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We'll see money skates across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Security guarantees for Ukraine are a key sticking point as President Trump seeks to broker a peace deal to end Russia's war. Ukraine's allies have proposed legally binding security guarantees and troops to protect the country once a ceasefire is reached. Greg Sullivan, Bloomberg's Russia economy and government editor, joins me now. So, Greg, let's talk about the latest round of discussions. I mean, certainly there has been more momentum. A lot of talk about the security guarantees. Trump has ruled out Ukraine joining NATO, but there is discussion around an Article 5 type structure. What do we know?
Well, despite a lot of leaders after these discussions proclaiming progress and success in converging around what these security guarantees would be, a lot of the details do remain unclear. We know that there's talk of a multinational force in Ukraine to help in case of any breach of a ceasefire, but the scope and the role of that remains unclear, as does to a large extent the American involvement. We know that the Americans will be involved in the security guarantees, but to what extent is still unclear. The White House has talked about monitoring and intelligence sharing, and we know that the UK and France have committed to send troops. Now, I would caution that it's still unclear whether Russian President Vladimir Putin would accept any of this. He has ruled out NATO forces on the ground in Ukraine, and just yesterday, on Thursday, the Russian Foreign Ministry said this would lead to the increased militarization and be viewed as a threat by Russia.
Okay, so it seems a bit of a non-starter, obviously, for Russia. I mean, what else is holding up these talks? That feels like a very insurmountable hurdle to cross, but then also there's a question of territory. So
absolutely, and that, in some ways, is an even bigger sticking point. So even while the U.S. has managed to come closer to the Ukrainian position on security guarantees, there's this issue of territory. Ukraine has been reluctant to cede territory that it still controls, but that Moscow is demanding. Moscow has not backed down from this demand for territory in the east. They routinely said that they will continue to pursue their goals militarily, and even last night launched an airstrike against Ukraine, a massive one. So they're still pursuing that territory. They have not backed down. So far, Ukraine does not want to cede that territory. So it's a very big obstacle that remains.
Greg, thank you so much for bringing us the latest. Greg Sullivan, Bloomberg's Russia economy and government editor. Now, elsewhere, NASA will launch its first ever medical evacuation from the International Space Station in the coming days due to a crew member's health issue. While the unidentified astronaut is stable, the agency is cutting the Crew 11 mission short because the station lacks the equipment for a full diagnosis. This is NASA's first mission that ended early for medical reasons. And coming up later today, don't miss this month's edition of Bloomberg Tech Europe. Tom McKenzie speaks to Grammy Award-winning artist will.i.am about how AI is shaking up the music industry. That is at 8:30 a.m. London time, 12:30 p.m. if you're watching across the Emirates later today. And a look at markets as we head into the final trading day of the first trading week of the year. And this is the scoreboard. We're basically flat for S&P futures. But I will say for the year, though, we are off to a more positive start, tracking gains of more than 1% for both the S&P and the NASDAQ. Watch out today for jobs figures and then also that potential Supreme Court ruling on Trump's reciprocal tariffs. Both of those events could be quite market moving. European markets also seen opening up in the green, up 0.4% as we get going and gearing up into the European session as well. A close eye on geopolitics, not just in Europe, but Venezuela on demonstrations too. That's it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the products?
Can you just move your supply chain out of China and into the US or out of Mexico and out to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Beirut, and this is Bloomberg.
Live from London, this is Bloomberg at Daybreak Europe. I'm Lizzie Burton with your top stories. Stocks drift as markets brace for the US payrolls report and a possible Supreme Court ruling crucial to President Trump's tariff policy. Meanwhile, Rio Tinto and Glencore get back to the coalface, resuming talks to create what would become the world's biggest mining company. Plus, Donald Trump signals the US military could strike drug cartels on Venezuelan territory, as he also looks to firm up his grip on the country's oil industry. A happy Friday, everybody. I hate to break it to you, but there's a lot of risk before the weekend. This is how markets are looking at the moment. Futures pointing higher just on both sides of the Atlantic. The 10-year Treasury yield at 4.17, but all of that could change because take a look at the risk events on the docket for today. Two big ones. We have the non-farm payrolls report coming out of the US, and we could potentially get this tariffs ruling from the Supreme Court later. The justice is sitting on the bench from 3 p.m. London time, and it's an opinion day, so maybe we get a decision. We're also going to get the German industrial production numbers at the top of the hour, but those set to be lackluster. Let's get you ready for the working day. Well, it could be an especially volatile day for the markets today as we await a pivotal US jobs report and a potential Supreme Court ruling on President Donald Trump's tariffs. The jobs report, the first since the government shutdown, will hopefully provide a reliable reading on how the economy is faring. Speaking to Bloomberg, Fed Governor Stephen Myron says he's looking for 150 basis points of interest rate cuts from the Fed this year in order to boost the labour market.
I'm unsurprisingly the lowest dot. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation.
Let's bring in Bloomberg's Valerie Titel for more. Val, where could the jobs ruling and the jobs report and the tariff ruling leave the market today?
Yeah, there's a lot going on today. I think with non-farm payrolls, the really key thing here to watch is for an unexpected drop in the unemployment rate. It is expected to tick down from 4.6% to 4.5%, but if we go into the 4.4 territory, you're going to have the markets really starting to doubt that this labor market weakening is going to be a continuing theme into 2025. Perhaps that could point to a narrative shift in the market that the weakening trend of the labor market is behind us, and the market could continue to price out Fed cuts for 2026, as opposed to what Stephen Myron told us yesterday, that he still wants that 150 basis points of cuts. If we see the labor market switching to a more strengthening position, that could really start to doubt whether we do need further Fed easing this year. On the tariff front, it is important to note that what Polymarket with the betting odds are showing us right now is that tariffs are likely to be overturned. So take that into consideration when you view how the markets are likely to react. Perhaps we've already priced in IEEPA being overruled by the Supreme Court, but I think the general consensus out there is the market is going to trade it like a tax cut, essentially. It's going to be positive for corporate margins, so positive for the equity market in the time being, and it could be negative for the treasury market, essentially, because this is something that could add more worries over the deficit, and you have to start thinking about whether the tariff income has to be paid back. But that is still a big question. We could see the Supreme Court, strike down IEEPA, but then not necessarily declare that the revenue has to be paid back. That could be a decision they could push back to lower courts. The decision will have a lot of nuance, and then the other big thing to watch is how quickly Trump will react off the back of that to implement placeholder tariffs in the meantime.
I'm sure no one expects Donald Trump to have no plan B here. So yes, we'll dive into what that could be later in the show. But Val, we've already got markets reacting to the president saying that he's going to target housing costs.
Yeah, this is interesting. The president posting on Truth Social that he has instructed Fannie and Freddie Mae to buy $200 billion worth of mortgage bonds. I think this is telling us two things. The Trump administration is really targeting affordability ahead of the midterms, almost at the detriment of the U.S. deficit. And it's also just telling us that Trump has had more willingness to intervene directly into the day-to-day functioning of business. Now, off the back of this, we did see mortgage bonds rallying, but we saw an even bigger move in home lender stocks. The likes of Loan Depot surged 18% in post-market, even Rocket Mortgage surging 7%. But the market impact, really unsure. Fannie and Freddie Mae have already been buying mortgage bonds in the last few months. They do have the ability to do so, and we had an estimate from Citibank saying buying of around 200 billion of these bonds could lower mortgage rates by 25 basis points.
Yeah, the president definitely starting 2026 on an interventionist footing. Bloomberg's Valerie Titel there. Thank you so much for walking us through all those market reactions. But it's already been a choppy session in Asia as we await that US jobs data. Let's get to Winnie Xu in Hong Kong now for more. Winnie, what are you watching?
Good morning, Lizzie. Happy Friday. Now we're seeing MSCI Asia marginally higher today, but in fact, the gauge is headed for its best first full week of trading since 2023. And yes, all eyes are on the tariff rulings as they can provide a tailwind for the exporters in our region. And hence, you're seeing that exporter-heavy Japan's Nikkei 225 up more than 1.5% here. And that is also supported by a weak yen and also strong earnings from fast retailing. Now, we also want to flip the board and take a look at what's going on in the Chinese key economic data, as we just saw that actually not a bad set of data. You saw that CPI numbers, a bit of a rebound driven by food costs, but PPI numbers here down 1.9% year over year is actually better than the estimate of 2% decline, and that's also being driven by the anti-involution efforts. And sticking with China, I want to highlight a key listing today here in Hong Kong is Minimax. As you've these imports from NVIDIA in terms of the H200 chips. Back to you, Lizzie.
Renee, thank you so much. Happy Friday. Have a great weekend. So let's also get to the top corporate news of the morning. Rio Tinto shares falling in Sydney as it resumes talks to buy Glencore in a deal which will create the world's biggest mining company. We can bring in our metals and mining reporter Martin Ritchie now. Martin, if this deal makes so much sense, why hasn't it happened sooner? What's the hurdle, the big hurdles remaining?
Yes, another mega merger in mining. This one, if it went ahead, would combine two companies with a total market cap of more than $200 billion. So it's a big deal. It would be the biggest mining deal ever. Look, these two companies had talks back in 2024, about combining. And that didn't go ahead for various reasons. There's been a lot of deal-making activity in copper since then, though, and I think there's a sort of eagerness to try and see if it can go over the line. The complicating factors here, there's a few of them, but the main one that people point to is about coal. Glencore is one of the world's biggest coal producers, but Rio, on the other hand, has actually exited the fossil fuel in recent years. So they might have to come to an arrangement where, for example, the coal assets are sold before any merger, or they're put into some other structure post-merger. That's one of the complications. Another one is just kind of cultural. Two companies are seen as having a very different style of management and execution over the years. Whether that's true now or not, I'm not sure. And also, Rio Tinto has a dual listing structure between Australia and the UK, which again may make structuring a deal somewhat difficult.
Okay, so potentially a strange marriage of cultures and assets, Martin. We've also talked a lot this week about mining in the context of tariffs and geopolitics, of course. Copper hit record highs past $13,000. It's below that level now, but would this deal even be on the table without President Trump?
I think that the deal, obviously the record high copper prices offered a sort of a very appropriate backdrop for the deal. But I think it's something that would still be going ahead. Well, who knows? But I would say it would still be going ahead regardless of where prices have gone over the past month. The miners have been, trying to put deals together on copper for many years now. And you've seen a flurry of transactions over the past year. You've seen the most high-profile ones being Anglo combining with Teck, and BHP also trying to make deals. They want copper because of its demand profile over the next 10 to 20 years and the prospect of relatively high prices for a long time to come. So the fact that prices are high right at this moment adds some extra flavour, urgency, but I think it's something that they're looking to do anyway.
All right, Martin, great stuff. Thank you so much, Martin Ritchie there, Bloomberg's metals and mining reporter. And if we just check in on the commodity space as things stand, as I say, copper is actually below that 13k a tonne mark at the moment. It has surpassed it for the first time earlier in the week. It is up 1% though. We have gold on the back foot too, down 0.2%. Traders really waiting for that US jobs data for clues on the Fed's path ahead. And we have oil extending its gains as traders focus on the Iran risks and Venezuela. We'll dive into both of those later in the programme, but Brent there at $62 a barrel. Well, coming up on Daybreak Europe, it's a big day for the future of Donald Trump's tariff policies. We'll wait to hear from the Supreme Court, and we'll be speaking to Origin Advocacy Principal Hayley Craig next. Plus, later on in the show, we'll be discussing the markets and what we can expect from that jobs data with RBC Wealth Management's Frédéric Carrier. That's coming up at 6:45 a.m. UK. So don't miss those conversations. Stay with us. This is Bloomberg. Good morning.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's Jobs Day, and Bloomberg has the report under surveillance.
Growth hasn't been that bad. What's been bad is the employment growth. Why is 26 going to be different? The balance of power in the jobs market, I think, has shifted towards employers.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What really is going to matter is the inflation data and the jobs data we get in January. There's a lot of strengths despite some of the weakness that we see in the unemployment rate.
The December job report, today on Bloomberg.
I'm very confident that we have a very, very good chance. I mean, the law's on our side. The law is on our side here. So let's win that. Now, if we don't win, there's the whole alphabet number soup of things we've got.
Would you consider resigning if the case is lost?
Oh, of course not. That's silly.
That was White House trade advisor Peter Navarro speaking to Michelle Hussein ahead of the Supreme Court ruling on the legality of some of Donald Trump's tariffs. And you can listen to that full conversation by searching for the Michelle Hussein Show wherever you get your podcasts. Well, that ruling could come as soon as today. It's a decision which could undermine President Trump's economic vision and be the biggest legal blow of his second term. I'm pleased to say joining me now from Washington is Haley Craig, former US Senate trade advisor and now principal at government affairs firm Origin Advocacy. Morning to you, Haley, or should I say good evening. Thanks for staying up late for us. Do you expect the courts to deem Trump's Liberation Day tariffs unlawful?
That is the consensus, I think, among the vast majority of trade attorneys and anyone that's been following this case. I think it's important to note that this case hinges on tariffs under one specific statute. That's called the International Emergency Economic Powers Act. And that is a statute that is not a trade law, and it has never been used to impose tariffs in the past. It actually sits under Title 50 of U.S. Code, which is war and national defense. All the other tariffs that the administration has used in the past are actually within the trade code. And so the word tariff doesn't even appear in this statute. It's primarily been used under, it is a national emergencies power, and it's primarily been used to sanction hostile actors, whether that be states or individuals. So this is actually a very novel use of the statute, which is why it's unsurprising that there have been over 700 challenges filed to these tariffs, which cover approximately $1.6 trillion in U.S. imports, since they apply to almost every country on Earth.
So, Haley, we're here in Europe. If these IEEPA tariffs are deemed unlawful, would you expect the countries that were on the receiving end of them to honour their commitments still, or do you expect to queue round the corner to get back to the negotiating table and rehash all of these trade deals?
That's a really interesting question in terms of one of the domino effects we're going to see come out of this decision should those tariffs be struck down, because these deals basically on the U.S. side codify a tariff rate lower than the reciprocal rate that was announced on April 2nd, but they still codify tariffs that are only enforceable if IEEPA is allowed to be used for that purpose. And so it's going to be interesting to see how the EU reacts, how the UK reacts, if the leverage of, the 10% tariff for the UK and the 15% tariff rate for the EU kind of goes away, what does the United States do next? And I think you kind of heard Mr. Navarro allude to it in the clip you just played. The White House does have other options when it comes to tariff authorities. They just aren't as potentially broad as IEEPA. And so I think what you would see, my guess would be a reversion to using steel and aluminum, copper, other types of tariffs as leverage.
And how long do you think it would be before Plan B takes effect? Because Valerie Teitel, our reporter earlier, was alluding to the opportunity that window would create when it comes to corporate margins and profits.
Yeah, I mean, I think if I were the White House, I would have a plan. I know they already have a Plan B in place. They've said that publicly. It's just a matter of what that looks like. There is a provision in trade law that has not been used yet called Section 122 that can be put in place pretty much immediately for 150 days for a ring around the collar style 15% tariff. So that could be an interim kind of holding position for the White House while they do the necessary investigations to ramp up, let's say, Section 232 or Section 301 tariffs. And so I think that's a great graph to show here. 122 would be a pretty novel thing to see. It has not been used in a very long time. Section 338 also has some guardrails on it, which I think is why the administration has so far relied more on 232s and 301s. Section 201s, of course, require investigations from an independent agency, so that's a little bit outside the scope here. But I would not be surprised to see a reaction very quickly from the White House in order to kind of stop the gap, right? In terms of the tariff rate that's being applied pretty much globally, even though it varies by country.
But surely, if these tariffs are deemed illegal, it's going to be an absolute customs nightmare. Is Congress going to have to pass legislation in order to process the refunds?
Yeah, I think that's another really great open question. And the logistics of getting a refund can also be really difficult depending on who the importer of record is. In a lot of cases, it's freight forwarders that are paying the tariff up front and then forwarding on the bill to the end customer, the importer within the United States. And so there's also a question of how do these intermediaries get refunded versus, the final importer of record, the consumer that actually purchased the item. And it's just going to be a logistical nightmare. I mean, the tariff code has been amended 50 times in the past year in 2025, and half of those amendments were due to IEEPA. So there have been a lot of tweaks along the way in 2025. There have been on the water exemptions. There have been changes for countries. There have been sectoral specific rules in place, and so sorting through that web is going to be really, really difficult, especially with government level software. And so there's been interest in Congress for a while on customs modernization, making it easier for importers to get refunds, for example, when they re-export a product. That's called duty drawback. And so I could see the Supreme Court kind of kicking that question to Congress, since it does deal essentially with the refund of taxes, which tariffs are.
Okay, really good to get your insights. Hayley Craig there, former US Senate trade advisor and principal at Origin Advocacy. We thank you so much. Well, if we look at the odds on this decision, as Hayley says, it's looking likely not to go in Trump's favour. Kalshi, the platform, has bettors seeing around a 28% probability of a ruling in favour of Trump's tariffs, only 28%. But at the same time, they assign only about a 40% chance that the court would order the government to immediately return tariff revenue. So, of course, as Hayley says, focus will then turn onto what happens next after the ruling. So that could come as soon as 3 p.m. London time. But coming up right here on Daybreak Europe, tensions rise in Minneapolis as local and federal authorities clash over an investigation into the shooting of a woman by ICE agents. We'll get into the detail next. This is Bloomberg.
Political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach covering financial markets.
If it matters to you like, we're covering them. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I've seen presidents come and go, and I've seen them age and change, and it's past my bedtime.
What will you do next? I mean, there's always rumors. Do you think about what you do next, or are you focused more in the here and now?
I'm here and now, but the truth of the matter is that I've always taken risk. I've never sort of secured my position to make sure that the pension was there and that the comfort was guaranteed and that I was on a unlimited term. No, it's sometimes you just have to jump.
Christine Lagarde dismissing a return to French politics there, and you can watch the full interview with the ECB president on Leaders with Francine Lacqua. That's today at 5.
嗨，大家好，我是喜哥。今天我们来跟大家分享的是什么料理？今天来跟大家分享的是我自己的一个私藏的一个汤面啊，叫做火锅面，或者是火锅汤面都可以啊。因为我早期都是分享一些干面，我很少分享一些汤面。其实汤面的话，其实我个人是比较不是很喜欢吃啊，但是我的老婆跟孩子都特别的喜欢吃。好吧，那我们就废话不多说了，那我们就开始喽。那我们来开始准备火锅料的一些配菜，一根葱就好了，轻松把它切成一段一段的，我们把它放在旁边备用。再说洋葱啊，洋葱切一点就好了，大概只要这样子的量就可以了。 今天准备的是1人份的火锅面啊，再来高丽菜，高丽菜我们就切一点。来，就是这3样，我们等一下会用到的蔬菜，就是这3样。啊，如果家里有一些香菇啊，或者是有一些吃不完的玉米笋啊，反正只要是蔬菜的，你想要放的话都没有关系啊，因为只要味道不要太重的，放上去火锅汤面里面其实都蛮好吃的。准备2到3片的火锅肉片啊，你可以选择用梅花肉，你也可以选择用3层肉。像我今天的话就是梅花肉啊，这个超商都有，2到3片就好。如果想要吃多一点的话，你就准备多一点。再过来就是火锅料啊，火锅料的话，西哥是准备非常多个款式啊，像我每一种都会大概2个到3个这样子。
每年年末都是各路游戏厂商集中发售游戏的时间段，比如12月2日就有3款游戏选在这同一天上市：木卫四协议、极品飞车不羁、漫威暗夜之子。其实有点难以取舍，3款游戏我都有兴趣。经过激烈的思想斗争，我先入手了木卫四协议的豪华版，毕竟前死亡空间执行制作人、大锤联合创始人之一的 Glenn Schofield 的作品，索尼还派出了大量开发者予以技术支持，卖相看上去也还行。挂着死亡空间精神续作的名号，也让不少玩家十分期待，感觉应该也差不到哪里去。待到2号媒体评分解禁时，一看 GameSpot 5分，IGN 7分，大惊，这是雷了吗？于是赶紧把预购的豪华版给退了，又买了份普通版，毕竟机票里的新模式什么的都得等明年，剧情 DLC 更是直接明年夏天去了。解锁后第一时间开玩，进游戏的第一个场景就有明显的卡顿，关闭了一些特效，卡顿依旧，转个拐角开个门都会来一下。剧情进展到第1场战斗时，居然也掉帧。考虑到这游戏近战中闪避和格挡的重要性，当时心想这样玩起来也太难受。虽然我电脑的配置已经有些过时，还是3年前配的9700K 加2070S，但也不至于1080p 下关光追，只开中效果也卡成这样吧。一看 Steam 评价，好评率30%不到，原来30和40系显卡照样能卡到20多帧，似乎是虚幻4着色器编译卡顿所致。于是把 DX12 切换至 DX11，发现卡顿改善了很多，虽然有时帧数依旧不算太好，但至少能玩下去了。而就在我硬着头皮通关后，第2天开发商 Strike Distance 就发布了优化补丁，试了一下，确实好了很多。不过在2周目继承要等到明年才会更新的情况下，我也懒得再重新打一遍了。除去首日 PC 版的优化问题，木卫四协议说烂也没有烂到哪儿去，但也确实和很多人的预期有所差距。也许是前期宣传让大家的期待值过高了，谁叫开发商自己号称这是4A 级游戏，而且游戏的汉化也有些问题，一些地方明显还是机翻，主菜单里的制作人员名单翻译成了信用点，开头字幕甚至还有日文的。也许这次的中文字幕就是基于日文做的，这大概能解释为啥字幕里的话经常和英文语音对不上。不过有一说一，木卫四协议的开场演出水准还是挺高的，索尼提供了动捕技术支持，人物面部表情非常自然。主角亚格布里由教士杜哈明扮演，看到熟悉的演员，精细的建模，场景氛围营造也确实很有大作响，画面表现在虚幻4引擎的游戏中算是顶尖的了。开头有种好莱坞科幻大片的感觉。虽然游戏整体的剧情走向其实也算不上新鲜，这里就只介绍一下背景。主角是一个货船驾驶员，负责运送一些 UJC 公司的货物前往木卫四的黑钢监狱。由于恐怖分子搞破坏，飞船坠毁，亚格布也由于不明原因，与凯伦·福原扮演的恐怖分子一起被关进了监狱，然后脖子上也安装了一个植入物，用于显示你的血量。结果一醒来，监狱就爆发了丧尸感染。整个剧情让我想起了《生化危机》、异形和少许的《死亡空间》，关键词：大公司、实验、秘密结社。相关题材的电影或游戏接触的比较多的话，你大概都能猜到后面会发生什么了，我也不多剧透了。后面我主要讲下游戏的其他方面。虽然被称为《死亡空间》的精神续作，两者也有不少相同点，比如 如没有多余的 HUD， 全息显示的菜单，全息显示的弹药数，爆头并不会杀死你的敌人，还有能制作以及升级武器的商店，但游戏在玩法上的区别还是挺显著的。毕竟这里你扮演的是一名铁窗生涯第一天就碰上丧尸疫情爆发的囚犯，而不是一个把采矿工具当武器用的工程师，所以一开始你就只能拿着一根棍子敲人。近战在木卫四协议里占的比重很大，因此有个专门的近战系统，不过并不复杂，类似于一个 QTE。敌人攻过来的时候，按左右方向键能进行闪避，后退键进行格挡。出于某种奇怪的执念，我一开始老是执着于使用格挡然后反击，不喜欢用闪避。后来才发现，木卫四协议里的闪避比格挡好用多了，而且判定相当宽松，用不着你判断敌人会从哪边攻过来，长按着任意一个方向键就行。在游戏初期，你获取第一把远程武器后，会有一个狱卒被怪物转化的场面。这里原本是想让你用枪练练手的，但是如果你在这儿一直使用闪避的话，会发现本作的近战系统在1v1时有多么回合制，敌人的攻击模式固定，甚至打完还会退回去2步。不过这种滑稽的景象也只会在这位身上出现。碰到1v多的时候，至少在前期，你和另一个近战型敌人打架时，其他近战型敌人的攻击欲望不会那么强，但还是会打你，有的怪甚至还会逃跑。他们犹豫不决、有些反复的行为，让本来就不是很恐怖的游戏氛围显得有些欢乐。不过后期怪物数量上去后，他们就不那么讲武德了，你很可能会被围殴致死。本作中的敌人类型并不算多，有只会近战的小怪，会远程喷绿色不明液体的远程怪，隐身四脚爬行怪，登场次数非常有限的自爆怪，到了中后期会有大量视觉退化，只能听见声音的小怪。但进入战斗后，他们与普通近战小怪没有什么不同。还有个小 boss 双头哥，然后他一共会登场4次。木卫四协议里有个设定，就是在接近中期开始，小怪受伤后会露出触手，这个时候你就需要使用枪械对其射击，否则怪物会发生突变。突变完成后，他们会成为血更厚、伤害更高的家伙。不过攻击模式其实也没啥不同，你宝贵的弹药就是用来防止敌人突变的。本作的特色系统就是敌人硬直后会给你一个短暂的射击窗口进行瞄准射击，造成大量伤害，是一种高效利用手中子弹的方式，尤其在资源比较匮乏的前期。不过这个打架方式你可以从头用到尾，近战砍一波，出了弱点来一枪，然后继续砍，如此循环，直到目标倒地，然后切换至下一个目标。如果你升级了武器伤害，还有一种打法也挺好使的，可以直接朝腿射击让目标倒地，然后走过去来一脚就完事儿。不过游戏里还有更加高效的杀敌方式，就是 GRP 系统，相当于一个强化版的重力手套。除了可以把场景中的补给箱拽过来踩碎拿取物资外，你还可以用它抓取场景中的瓶瓶罐罐砸人，或者直接把敌人扔出去进行场景杀。带刺的墙面、快速旋转的齿轮与扇叶都能让碰到的敌人祭死。用于清怪非常高效，甚至可以说有些过于强大。不过抓人的时候电力消耗也挺大的，这玩意儿默认会先把敌人拽到你身边，正准备扔出去的时候没电了，就有些尴尬。而这种情况其实经常出现，因为电量槽的显示比生命槽更加不明显。GRP 的使用，我觉得设计的比较好的一段，就是在游戏中期来到木卫四表面后，会有一个有着不少隐身怪出没的场景，还不时会从雪地里冒出来几个杂兵。
I don't think that's likely. What is far more likely is that money will be thrown at this, and even if the US throws $5 or $6 billion at some kind of purchasing agreement, it would then have to, on the basis of that going ahead, ensure that Greenland was genuinely independent of Denmark to make such a thing happen. But I just note that in the end, I think Trump is going to use money as the primary lever, because after all, Denmark's already faced threats of tariffs and trade barriers in the recent past.
If Greenland were taken, what would you expect governance to look like?
I think the most likely outcome is, and it's a huge if Greenland was to become independent of Denmark, if Greenland was to enter into some kind of free association agreement that the United States has, by the way, with Pacific island territories, then what you could find is an arrangement where the United States would take responsibility for defense and security matters and foreign policy issues, but Greenland would be allowed a degree of autonomy in a way that, for example, would mirror what Greenland currently has within the Kingdom of Denmark. So what the United States, I suspect, is going to offer directly to the people of Greenland is, here's $5 or $6 billion to ease the way for you to say yes. And what we're asking you is to transfer your allegiance, your relations, your formal relationships from a very small European state to a huge superpower that, for example, spends $900 billion on its defense, and it's prepared to throw $5 or $6 billion to purchase or to take over Greenland. That's really the scale of what we're talking about. Denmark offers 500 million euros a year in the form of a block grant. Denmark can't match the spending and military power of the United States. It's really that simple.
And of course, we know that President Trump wants to spend an extra $500 billion a year on defence, this demand this week. So when you take that and wonder how he would want to spend it, together with how we started the week, the Venezuelan operation, would you say that the US is moving towards an imperial foreign policy?
Well, last year I wrote about Trump as the imperial president par excellence. I've also just recently written that he wants to be a hemispheric president. This is a man with insatiable ambition, somebody who likes maps and has a very keen interest, I think, in expanding the territorial and resource footprint of the United States. I genuinely think Trump is, in essence, in agreement with Putin that the world is changing and it's moving increasingly to a world where great powers have their spheres of influence and domination, and everybody else just has to fall in line. It's really quite a sort of pivotal moment, you might say, in global geopolitics.
Okay, excellent to talk to you this morning. Klaus Dodds, geopolitical writer and interim faculty dean for science and technology at Middlesex University. Thank you so much, and good morning to you. Well, as we head towards the market open here in Europe, we are looking at shares of Glencore rising on Tradegate. This, of course, on the news that Rio Tinto's in talks to buy Glencore. It would create the world's biggest mining company. They'd have a combined market value of more than $200 billion. And this, of course, just a bit over a year after the earlier talks between the two companies collapsed. So we'll be monitoring the developments into February, when is the deadline for that deal. But coming up, we'll look at what we can expect from the jobs data later and the potential market reaction with RBC Wealth Management's Frédéric Carrier. That conversation next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food, I never had this ingredients never used in Japan. Kind of like wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan the fresh fish is sashimi. But Peru use fresh fish, make the called ceviche, cooked with lemon juice. You never use the soy sauce. First time I eat this, kind of the wow. So then after this one, my open eye more, my cooking style got changed, combined to Japanese style and another country food, then make normal style.
Middle East and Africa, vibrant resources and high yield investment opportunities.
Okay. You'll find you for the first question, and you're on your own.
Hey, how are you? Yeah. Ladies and gentlemen, please. The president will begin by addressing the nation. Please hold your questions until he's finished his remarks. Ladies and gentlemen, the President of the United States.
Hello, everybody.
10 seconds.
Total EV-related write-downs, $7.6 billion.
5,
A new
4.
regulatory filing shows the company's recording all of these charges
Good
in its
evening.
fourth quarter results.
A few minutes ago, the United States ambassadors to every country in the world told the leaders of those nations what I am about to tell you. It's a bit complicated, so it will take some time, so I hope you will bear with me, hear what I have to say. A little over a year ago, two American astronomers, Marcus Wolf and Leo Biederman, working on a mountaintop in Arizona, saw something in the night sky that caused them great concern.
Lawmakers from the House of Lords has criticized the Treasury for its limited
comment
grasp
was,
of the risks related to
well,
in private
there was a remote possibility that the comet was on a path that could bring it into direct contact with the Earth.
as a matter of urgency. Those are some of our top corporate stories this morning, but turning to the macro, because today plenty of eyes will be on that release of the all-important US jobs data and a potential Supreme Court ruling on President Donald Trump's tariffs. Joining me now, I'm pleased to say, is Frédéric Carlier, Head of Investment Strategy for RBC Wealth Management in the British Isles and Asia. Good morning to you, Frédéric. Good to see you again. What are you expecting in the jobs data later? Let's start there. How weak a reading would you need to see to expect a Fed cut this month?
It would have to be very weak indeed, but we expect 70,000 new jobs created this month, and we will be looking at the source of these jobs. Where are they coming from? The trend over the last few months has been it's very much structural.
Look how real they are.
Our brand new series.
Things linked to the longevity of the population, and we'll also be looking at the retail sector. That for us is the wild card. Historically, over the last 10 years, the retail sector generates about 14,000 new jobs in December for the holidays. This number might be much lower this time around, given the unwinding of the front-running of the tariff purchases and also much slower immigration.
The most sophisticated AI on the planet.
Daddy, can we get her? Structural or cyclical?
Think about your family,
Structural still,
not Maggie.
and this retail wildcard.
I'm sorry. This is
So
a
Stephen
now.
Nyren, the Fed governor, of course, told us yesterday he wants 150 basis points of cuts this year to support the labour market. I think traders are pricing at least 2 quarter-point cuts, so significantly less than he would like. What's your outlook for the number of cuts we'll get this year?
So we think one, maybe two over the course of this year.
Hey, I like that hat. You sell men's clothes? Where you got that?
We do not expect a rate cut at the next Fed meeting. It seems to us that the overall economy inflation outlook really do not warrant a much more aggressive cost-cutting policy.
George, come on. What's your name?
Red.
Yeah? My name's Billy.
If you get a downturn in the second half of the year in the US, that's what you're worried about.
Well, its valuations are stretched in most developed markets. In the US, more, even if you take out the very highly valued Max 7. So valuation levels are something we spend a lot of time thinking about. However, they're not a market timing strategy. So long as rates are stable-ish, so long as corporate earnings keep on delivering, we think that these valuation levels can be sustained. But yes, if something happens to the economy, if there is a big wobble in terms of the outlook for economic growth, if the AI story starts to unravel, both in terms of capital outlays or the lack of evidence of productivity returns on these investments, if investors lose faith in the health of earnings growth this year and next, then there could be an adjustment in markets. And so we tell our investors to be mindful of this, to be market weight against their appropriate benchmark, but to be prepared to be defensive if that situation arises.
Okay, well, if we can look also to the other major risk event on the horizon for today, Frederic, of course, that is the potential Supreme Court ruling on Trump's tariffs. If the Supreme Court deems the IEEPA tariffs unlawful, how worried would you be about the US deficit, given he still needs to pay for his tax cuts and maybe this defense spending as well?
He does need the money, and we think that the White House is already working at trying to replace these tariffs. We think that replacing one for one will be very difficult. We think the White House is going to make it very difficult also for corporates to get any kind of rebate for the tariff they may have already paid. But overall, for us, it's mostly about the flexibility. The current setup gives a lot of flexibility to the White House in terms of dialing up or down pressure on countries. Any replacing tariffs would be a lot less flexible for the White House, so less of an effective tool for them. But overall, for the fiscal deficit,
I want the warheads ready to launch in 1 hour.
Small lumps of
I'm finished.
This one will never forget.
Increase in the deficit.
Just finally, Frederic, what would be the dollar reaction to the threat we were discussing in our last conversation if President Donald Trump were to attack Greenland?
We think that the overall tendency for the US dollar is slight weakness. We think that central banks will continue to want to diversify. The US is proving to be a less reliable actor than it's been in the past, and so we think that this pressure that we've seen last year, sometimes it's more intense than others, but we think that the dollar will not be entirely replaced as a reserve currency, but is likely to weaken in the long term.
Okay, Frederic, always a pleasure to speak to you. Frederic Carlier there, Head of Investment Strategy for RBC Wealth Management in the British Isles and Asia. Well, switching to tech news now, TSMC's revenue has topped estimates, reinforcing latest sustained global AI spending in 2026.
I want the warheads ready to launch in 1 hour.
When I'm finished, this one will never forget.
Later on this morning, Bloomberg Tech Europe takes a deep dive into what AI is shaking up the music industry. That episode
We have never faced a threat like this. A team is being assembled. They're the best operatives in the world. When all else fails, we don't.
Standing in front of you, I've built a 6 accelerator system. What's it accelerate? You. This is General Hawk. Mission is a go.
Here they come.
Go, go, go!
We're running out of time. Eject!
This is only just begun.
Only on Bloomberg. What is going to be the consequence for U.S. markets? We'll see what is going to across European equity markets. Take a look at how we're faring when it comes to Asian markets.
Seeing
most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Good question. Great question. I so appreciate that question. You really ask interesting questions.
Bloomberg Television. Top experts, great questions.
We're still four candidates. It's the president's decision. One of the candidates has not been interviewed yet.
Who's that?
Rick Reeder. I think he manages several $1 trillion at BlackRock. He is the only person with no previous Fed experience.
Is that a plus?
The president says so.
And Waller is the fourth?
Chris Waller, who's sitting Fed governor, is the fourth.
Time frame still the same?
I would expect president's going to Davos, I think, in 2 weeks. So I don't know whether it'll be right before or right after that, but I think in January.
What call they?
Four names still in the running: Rick Reeder, Chris Waller, and the Kevins. And you can see here the Polymarket odds putting yellow Kevin Walsh in the lead here at the moment. So the race is still open for the Fed chair, and it looks like, according to Bessard, that we'll get a name either just before or just after Davos. So inclusion in January. But look, the Fed is expected by markets to cut rates 2 times this year. The jobs data today, of course, will play a crucial role in deciding that Fed path ahead. Hopefully this is clearer data than we've been getting. It's the last print for 2025. And when it comes to the non-farm payrolls number, the expectation among economists is 70k, the whisper number 65. Could this be the report that wakes up the Treasury market? Flip the board over one more time. We've also got the tariff ruling maybe coming from the Supreme Court later on today. Could this be what wakes up the bond vigilantes? We're down here sticking at a narrow range compared to what the range Treasury yields have been in. Could we break out of that range because of the jobs report or because of the tariff ruling? These are the 2 big risk events that are on the horizon today. Let's show you what else we've got coming up later on today. We've also got here in Europe the German industrial production numbers. So that's at the top of the hour in just a few minutes' time. As I say, also at 1:30 p.m. London time, the jobs report, and from 3 p.m. potentially a ruling from the Supreme Court, because it is an opinion day for them. They'll dive into all of that on the opening trade. Anna, Guy and Tom are up next. They'll take you all the way to the market open. But see you back here on Monday on Bloomberg Daybreak Europe. Good morning and happy Friday.
negociável.
Isso eu começo a também não sabia o que fazer. Foi a servir que eu passei no meu livro. Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado, porque no final tudo é dinheiro. People become their top money. Someone is trying to get rid of their money. Where is the money?
I think it's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
You tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Money can do a lot of good. It can really transform people's lives. But it can also hurt them.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everybody. It is Friday, it's the 9th, and this is today's agenda. Markets brace for today's many risk events. President Trump wants cheaper mortgages, plus mega mining M&A.
Modestly risk on when it comes to the equity markets, then the MSCI Asia Pacific in that region gains of 0.1%. European futures a slightly brighter picture here. We'll see how and to what extent that holds, pointing up by 0.4% after the losses of yesterday, down about 0.2 from the S&P on the stock 600, of course, having broken through that record on Tuesday. S&P futures then currently flat as we lead up to the data. Arguably, investors looking for more clarity before they put those trades on the countdown. So the opening trade starts right now.
Friday morning, good morning. Big day for the bond market. Huge day for the bond markets. If you are in London, your lunchtime menu is basically payrolls and the reaction to what is happening with the labour market in the United States. If you're in London, your dinner menu is basically made up of the Supreme Court and the ruling on tariffs. You can't go home, basically. The afternoon is going to be packed with events out of the United States. What's weird about this is coming into it, the Treasury market is in a super tight range, 10 bips over the last month, and the move index is super low. So do we have the potential for volatility?
Yeah, we probably do, don't we? Especially because some of these events are not going to be necessarily, well, we don't know if they're happening, personally. The Supreme Court, for example, if it does happen, if we do get a ruling, will it be very easy to understand? Will it be very evident what it all means straight away in a format that the markets can understand? That's one of the things I'm wrestling with this morning. Will the decisions on the various tariffs be the same? What will President Trump's response be? Will the Supreme Court actually delve into what happens as a result of this in terms of refunds?
What will the remedies be if they rule against the Trump administration as they potentially arguably look to avoid massive economic disruption? You talked about the fact that the 10 years has been trading in that range. In terms of the non-farm payrolls, just to update viewers, the survey number for December, 70,000 versus 64,000 in the previous month. Again, we expect to get this to be a clean print. The unemployment level expected to edge a little lower from 4.6% to 4.5%.
That's significant because if it goes higher, you trigger the sample, which everybody's getting quite concerned about. Is 70,000 enough? 70,000 is enough right now, doesn't it? This is an economy that basically is beginning maybe to gather a little bit of momentum, and you take out the immigration story, 70,000 sounds like an okay number.
To your point about the sample, Bloomberg Economics putting the focus for that reason on that unemployment rate rather than the number of jobs created, and suggesting that the supply of labour story is evolving a little bit. And it is cleaner, isn't it? Is it fully clean, this number? I mean, mostly it's clean, but there does seem to be...
The payroll number is the most ridiculous number in the world. So it's never clean, and it's never understandable, and the market reaction to it is never what you think. But we obsess with it. Well, Valerie does. She'll be here soon.
Housing though makes a lot of sense, doesn't it? I mean, is this a Trump administration increasingly looking like China to me, where the kind of intervention lived there. And this time, intervening in the housing market with the pressure on Freddie Mac and Freddie Mac, which of course the Trump administration has the right to do that because it's in the conservatorship.
Yeah.
Which actually was a similar legal structure to Britney Spears, by the way. But anyway, $200 billion mortgage-backed securities guy.
Tom, maybe giving a clue away as to his music tastes.
Yeah, I think so.
I think
so, inadvertently.
Britney Spears fan.
But we have seen President Trump's decision here, so ordering Fannie Mae and Freddie Mac to buy more MBS. The aim here, the same as yesterday's story, to bring down the cost of home ownership, to bring down, in this case, the mortgage cost. It's all about affordability. We're going to see much more of this then, one assumes, ahead of the midterms. We were talking yesterday about defence and oil, other things in the housing market. I mean, that's just this week.
So
parts of the market that this administration has been micromanaging.
Yeah, it basically wants to. It needs the affordability story to get better. But the question is, from a market point of view, to your point about China, how do you deal with this? This has to be a negative from a market point of view.
A slow burn negative. That as they build and build and build, we start to realise that markets are less free than we thought they were. We can't rely on the reaction from
You can't rely on the mechanisms which we've normally relied on. Things are getting whipsawed all over the place at the moment. It was housing stocks. It's what's happening with mortgages. It's what's happening in the oil market. And Trump's desire to intervene in so many aspects of market function has to have an impact, and it has to, in theory, it has to be negative.
I was going to say, you finish this conversation. I was going to say something on
just before we move on to the next one, is that the two key themes that we've got this week then is the policy aligning to November in the midterms, and that's going to be a key theme for 2026, and then the risks around intervention linked to that into various different sectors and how investors adjust to that and try and hedge for that or even position for that. And then there's the mining story, separate to what's happening, of course, with Trump administration, but potentially another mega deal with Rio and Glencore.
Well, you say separate, but actually, part of the reason we've seen copper prices so high in certain parts of the world and so tight the supply in other parts is because of uncertainty around tariffs. And so maybe there are opportunities in this for certain businesses, depending where you're operating, but we've got more conversations going on around M&A.
And so this is about copper, to your point, because it's the assets, both companies, Rio and Glencore, having significant copper assets. We've seen the prices above 13,000, not today, a little softer. It's up today, copper prices, but below that 13,000 level. What they do with coal at Glencore remains a question. And for Rio as well, the iron ore assets looking a little less valuable given the continued real estate squeeze in China, potentially the largest deal in the mining space on
Let's back up the very large truck for a moment and just think about where we were. We've tried this deal before.
Yeah.
Culturally, it's a difficult fit. I think
Twice before, at least.
Yeah, and precisely. The coal assets are a problem. You put Glencore and Rio Tinto together, and kind of clearly copper is the narrative here, but there's nickel and other things thrown in as well. But there are cultural issues. There's the issue of coal. I suspect the Chinese are going to have something to say about it. There's a regulatory aspect to all of this. How easy is this going to be to get over the line? The market is reacting this morning, sending Glencore up sharply and Rio down sharply. The market clearly believes there is something here, but it's going to be hard to get this done because these are the assets that governments around the world are increasingly nervous about.
Yes, absolutely, because of the role that they play in everything, in defence, in electrification, and all sorts. And we will no doubt return to the mining story. We will throughout the programme. Let's see what's coming up on the programme in terms of the guest conversations we're going to be having. We'll talk to UBS's Global Wealth Management EMEA CIO. So a perfect voice to get a perspective of some of these stories we've been throwing around today. Where are the risks in today's session and looking further into 2026? We'll also be talking about the Supreme Court ruling. Is that the big risk event of the day? How is that going to play out? What do markets need to know to watch for? Ilaria Zijoya will be with us, Birmingham City University Law Professor. Max Kettner also with us, Chief Multi-Asset Strategist at HSBC. So another voice to digest all of the fast-moving news events that we have at the start of this year.
Yeah, and a programming note as well this Friday, because today opening trading is going to end half an hour earlier than normal, and we're going to be followed by Bloomberg Tech Europe, which takes a deep dive into how AI is shaking up the music industry. In this episode, we're going to hear from Mike. So it's a sit down with Grammy-winning artist will.i.am, who is all in on artificial intelligence.
It's a renaissance. The same way the Renaissance, catapulted, dimensionalized the creative industry in the past. The Renaissance, this new Renaissance for this era that we're in. So it's the age of the hyper creative.
So you can get more of that conversation 8:30 a.m. UK time. You can can also watch on the terminal and, of course, on YouTube as well.
Yes, and really interesting the way that some creatives are really pushing back against AI, others embracing. I'm sure there's a whole host of grades in between. Let's tell you what is coming up from a markets perspective today then. We do have data that is not non-farm payrolls, but obviously that is the headline event in terms of the data points that we're watching for. 10 a.m. UK time, then Euro area retail sales as well. 3 o'clock, the Supreme Court gives its opinions. 3 o'clock UK time, this is. We get opinions from the Supreme Court. We think that's going to be about tariffs. There's no guarantee, but we think it is. And of course, President Trump will be meeting later with oil bosses, which, this is another risk event for the day. The messaging in this meeting, according to our reporting, seems to be do it for your country, invest in Venezuela for your country. That's where we are in the oil conversation.
Again, this is intervention. More intervention. The word intervention seems to be cropping up time and time again. Do it for your country. Again, it almost feels like a wartime for us, doesn't it, in terms of kind of the way that Trump is portraying some of this. And he's pushing these guys very strongly. How shareholders feel about it. Is it going to be good for shareholders? Do we actually need more oil? And lots of questions surrounding this. And it feels like the wildcatters at one end are all in, but maybe the bigger oil companies with shareholders tapping on the shoulder, a little bit more cautious maybe.
At a time when Goldman Sachs says that its clients are the most bearish on oil in 10 years. So again, weak oil prices and the cost of that infrastructure build out in Venezuela. Are there sweeteners for these companies if they do sign up?
Yes, it has, hasn't it? And some of that is the geopolitics, not the things we've been talking about necessarily, but Iran and concern around Russia. So those things, they're certainly on watch still.
Iran's a big story in this, so let's talk a little bit about that. What else do you need to know this Friday morning? Anti-government protests in Iran have escalated significantly overnight, with the regime in Tehran responding with a nationwide internet blackout. Thousands of people appear to have taken to the streets across the country, including the capital, Tehran. The unrest is emerging as the most serious threat to Iran's supreme leader since a 2022 nationwide uprising. Meanwhile, in a Fox News interview, US President Donald Trump issued this warning.
Iran will notice that if they start shooting at them, these people are totally unarmed people. And they love their country. They want something to happen. Look at their country. They've gone back 150 years. But I've told them that if they do anything bad to these people, we're going to hit them very hard.
In the United States, the FBI has taken over the investigation into a fatal shooting in Minneapolis of a US citizen by immigration officials. Minnesota State law enforcement has withdrawn from the investigation after claiming that it has been denied access to evidence. More large-scale street protests are expected over the weekend. And moving to technology, TSMC's December sales topped estimates, rising by nearly 20%. The Taiwanese giant, which is NVIDIA's go-to chip maker, will report full quarterly earnings next week, along with a forecast on capital spending for 2026. TSMC has received multiple upgrades recently on expectations of strong revenue growth and improving profitability, with growing predictions of higher AI spending this year.
It's not just the data centers. I mean, data centers is important in terms of the components that TSMC produces that goes into those, but they've also benefited, it's worth noting as well, I think, that iPhone 17 sales have actually been stronger than many had expected. And so TSMC, the major producer, of course, in terms of manufacturing those iPhones, getting a lift from that as well. So it's those two things that seem to be giving that momentum to TSMC. But it's a reminder that there are still no real significant evidence in terms of the manufacturers and the designers of these chips that the bubble is slowing, that demand is weak. We have not seen that yet.
As the bubble gets bigger, does the risk grow around Taiwan? Presumably it has to. All the stuff that comes out of Taiwan into the data centers, the geopolitics overlapping.
Do the stakes change and evolve around Taiwan, perhaps?
And well, that reminds us, President Trump meeting with the Intel CEO yesterday, and of course that 10% stake. There's a reason for that, national security. So the Trump administration is cognizant, clearly, of that risk and wanting to reshore, and Intel's going to play that role there.
Coming up on the programme, we will check on mining stocks, of course. Today's news, potential for M&A, consolidation within that sector. We'll get to that. Plus, BMW and Porsche are downgraded. Barclays, as GM takes a hit from cratering EV demand. We'll be across those moves in the auto sector at the open. Up next is Jobs Day. And markets are waiting for the numbers, but is it today's main risk event? There are other contenders, of course. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is
laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemima Versace in Beirut, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people,
This is the future. This is the 21st century economy.
the transactions,
It snapped up nearly $1 billion of Bitcoin.
and the technology.
We need to build digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Trading day is about to start.
You're already looking for that day.
The open trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom Kemp.
This is your opening trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Growth hasn't been that bad. What's been bad is the employment growth. Why is 26 going to be different? The balance of power in the jobs market, I think, has shifted towards employers.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What really is going to matter is the inflation data and the jobs data we get in January. There's a lot of strength despite some of the weakness that we see in the unemployment rate.
The December jobs report, today on Bloomberg.
We're still materially above neutral in my mind, and there's not really a reason to be materially above neutral if the labor market is in a weakening path and inflation is over, an underlying inflation is already running close to our target and on trajectory to hit the target. There's just not a real reason to be so restrictive, and we're running unnecessary risks on the labor market by being so restrictive.
Fed Governor Stephen Miron there, of course, speaking to Bloomberg. He also said he's looking for 150 basis points of interest rate cuts this year. That's more than many, of course, as he pointed out. He sees rates as being very restrictive. Let's bring in the next up in town south for more. Good morning. So, of course, the focus there from Miron.
嗨，大家好，我是 Frank。那目前是一个知名电商品牌的配送专员。从事这个行业已经5年的时间了。这个工作最辛苦的地方在于我们的包裹非常多又重，还要认识很多的路。如果你路不熟的话，你在配送的过程会遇到很多的困难。在这样的状态下，要连续在外面跑个7、8个小时。那外面很多人都觉得我们像是做黑手，是个很辛苦的劳动，我也不否认。但是我就是想要这样子踏踏实实的工作下去。
欢迎回到加班不孤单啊！比如说我们今天又出任务，出任务，对，我们现在人在三重，那我们今天的受访者他是一个配送人员，
是物流业吗？
对，物流的，他叫 Frank。对，那他听说他上班的时候都是骑摩托车在送货，他可能一天都骑车在外跑好几个小时。对，那我是跟他约8点半，我们到这边附近的一个餐厅吃饭。但是他刚刚跟我说他可能在晚一点，他在晚，对，所以我们先到餐厅等他。 那我们现在这边休息一下。
好啊，因为我们要快到吃嘛。好，那我买。哦。我只和你拜一下。我们前面停一下好不好？可以吗？可以吗？那你撑上来哦，撑上来。谢谢老板。哦，辛苦了辛苦了。真比较晚，一般都在8点半，这才快9点。8点半已经算加班。
超过6点就算加班。
哇，这搞到9点，
还蛮晚。
没关系，我们先进去好，我边点，然后我们再聊。
那就不用先录一下，因为我知道他发明词。好，我现在不知道是要流程是要怎么做。
就其中2个，就讲到现在没有在录影。
哦，好。
你早上几点起？
今天8点出，因为我们是9点上班，但是我就要提前1个小时。早上如果上班的话要提早1小时才会赛跑，才来得及
回来8、9点。
对对，但其实今天是我有出来好了。
所以你的分量已经可以下班了。
对，我的分量已经可以下班，可能5点多我已经没东西了啊，对吧？可是我看还没到下班时间，因为我们下班时间是6点，可是我们通常都会超过。
Frank 他是骑摩托车在送货，所以你这样不是只能载那种就是比较小、比较薄的人。
是哦，我也有大的，其实我们常常会超载。
那你们一天有规定说要送几件？
对啊，如果这样的话，那有些人就是一天就送2箱。
我们有规定啊，我们规定是一天要送90个包裹
，90个，9到10个还是90个
？90个，真的没有很多啦，
是很多啊，
因为我们是有个底线，然后会有送货嘛，还有送货的钱，1个月。全部的件都加在一起，只有前面扣的前面是400件生意，或者是底标。那你400件以后就是都有钱。我们有个集聚，可能400到800是10块钱，800到1200是12，然后每件整每件哦，然后1200以上就是每件都是16块。
Frank， 像你一个月可以跑到多少集聚？
集聚嘛，那个月大概可以跑到2800多。
2800多。我说你是最高集聚的。
我已经到最高，因为其实到最高其实不难，只要你愿意，对，都可以。
对，方便透露一下，如果你这样平均1个月送2个到最高，跑到最高这样1个月。
以我的程度来说，1个月有7万多。
7万多。
大家知道我们加班不是都会有那个，大家只要投稿都会有表单，对，我还没看到。我最近在看，我才发现，这是 Frank 投的第2次，你投过2次。
我看这个我会想要投稿的原因是，因为你是加班不知道吗？对，可是我常常都是加班加到觉得很孤单。我下班的时候大家都回家了，我通常都会跑比较晚，可能我动作没有比他们快，也或者是说我想要多跑一点。大部分人都觉得我不想要跑那么累，可是我能等的话就会尽量跑。对，只要他们没有叫我回来的话，
想要让自己再多赚。
因为以前就是可能家里的机动很多，然后妈妈因为我是单亲啊，所以妈妈照顾我，以前都跟亲戚朋友见蛮多的。给他还没退休，他现在就是在家里上班，对，因为他也不希望我太累，
就想多赚一点帮妈妈。
哇，你有没有下班了吗？那回家了。
我可能等一下还要再去跑一下外送，因为通常我下班的话，如果还
在跑，
你说什么？不是Uber Eats那个外送，Uber Eats的。所以你这样骑车，你就骑超过10小时。
对，是没错，可是我已经习惯。
那我们大家可以跟你一起去跑。
可以啊，可以。
我现在时间只有9点半。对。那现在要开始接。
对，现在要开始接。对，我们打开 app 的话，我们就会定位现在我所在的位置。
所以现在就等待那个外送单。
对，我通常都是可能就是边等的时候边移。
就是移动也往店家吗？
对。
好，那走吧。看下，好走。
government. If it is more borrowing, what does it mean for treasuries? Long.
你好 B24 Uber， 对。好。好，谢谢。这个寿司郎的服务态度什么的就非常好，讲话也温柔。
5分钟左右可以结束。5分钟，对，不好意思，我有点刚刚没有接到，对，现在才收到。
好吧。好了是吗？好。那就可以了。好，谢谢。好，已经好了，终于好了。正三六，哇，看这里。这两个人现在都找的比较顺利。哎，你好。哎，我到。对，所以我是按1312，对不对？对。哦，对。所以我走过了是吗？好。好，我看成3，好，谢谢。好，拜拜。你好，谢谢，不好意思看错了，拜拜。今天很冷，我围了一个骑车，围了一个像贵妇一样的围脖，所以我现在的身份很贵哦，我就是个贵外卖员。终于看到蓝天白云了，但是台湾这几天还是很冷，9度到12度这样子，还是很冷的，冷空气还是有降临的。跟台湾的朋友说一声对不起了，就是因为我太高冷了，就是又高又冷哦。然后再左侧上车。台湾真的有很多这种好吃的小吃，它都是隐藏在小巷子里的。原来这巷子里排的都是人啊！小三的路。借过一下。你好，Uber 769。小姐拿单子。不是，因为我看不到位置。他这个取站还要拿单子，然后就去那边。是姐。对，769。我说再等我取站。对，有取站哈。好，谢谢。你好 ，F19。D9。好，谢谢。这种就什么东西啦？天哪！我又走到哪里去了呢？你好，我按那个谷歌的导航也找不到啊，是有一个牌子往西岸北会场那边走吗？不是，那为什么地址是在那个啊？地址是错的呀。不是，你写的地址是那个中山区中山4路24号哎。没有，我也没有在那个柜场那里，因为24号我也找不到。你现在那个再传一个讯息给我，我给你送过去了，不然你也找不到我。
停路边，因为我现在正在开车，现在停路边传给你就可以骑出来。你就 Google 就可以找得到，好不好？
你现在你念给我好了，通人街什么？
就在附近的小山丘上。
好，拜拜。好，拜拜。这个定位是错的。1楼的信箱号，好的。好，我看到了，谢谢。我拍不了照，他没有拍照的，那我就放在这里。好，拜拜。但是这里都是大货柜的呀。你好，是在那个台积国际物流这里吗？哦，好。然后我再直走到底了。Hello。稍等。哎呀，有一点点倒了，不好意思。好，谢谢。下一个吧。哦，这里有一个地方很漂亮，我想带你们上去看一下。就是已经都来这里了，带你们上去看看。基隆也是有好风光的，在这里上来。来基隆玩的朋友们可以上来这里看看那个海景，就在太白庄这里。叫什么白米翁炮台哦，很舒服啊这里。这里能看到整个基隆的港口啊，大家看，对不对？整个基隆的经济都在这里。然后这边是港口，另外一边就是可以看到那个，可以看海景。到了，哇塞！大家看是不是很美？这里就是白米翁炮台啊，有历史的文化，有特色的建筑，包括有绝美的好风光。在这里看看海景，真的心情瞬间就好了。我现在站在这里，有一种站在历史肩膀上看一片海的感觉啊，非常不一样。吼一声好不好？嗨，大海！新的一年，祝大家顺顺利利，平平安安。新年快乐！好啦，接着要去干活啦。汪汪！狗狗，你在这里看风景哦，跟你一起看风景好不好？握个手吗？握个手。哦，好高冷哦。曾经有一个美女在你身边，你却爱答不理。唉，你就在这里做一个单身狗吧。再见，拜拜。该回去啦。要上来吗？你要上来？可以上来。哎呀！如果大海能够换回曾经的爱，就让我用一生等待。如果深情不是你不再留恋，就让它随风飘远。来停一下位置。哎，你好，我到这个门口要怎么进这个大门？好。你别跑，你叫我，你别跑。 别跑，出来呀！你要出来呀！你有本事放我进去，你放我进去啊！跟狗狗干上架了，放我进去啊！放我进去，放我进去啊！放我进去！你的吗？北海的，是吗？北海道铁板烧的，对，啊好，谢谢。好了，2点14分，停止接单了，去吃饭啦。
It can also happen that Trump convinces Congress to pass laws that back the authority, the tariff.
嗨，大家好，我是西哥。今天我们来跟大家分享什么料理呢？今天我们来跟大家分享我店里的料理，叫做打抛肉便当啊，非常不正宗的打抛肉便当。所以我先跟大家讲，它非常不正宗，因为这是我吃过外面的打抛肉，我稍微自己改良过后，就是我觉得还不错吃的那种口味啦。我记得那时候还卖了大概2-3个礼拜吧，这2-3个礼拜。这个评价很两极的啊，老人家觉得太干了，啊，年轻人是觉得还蛮好吃的，还有小孩子也觉得蛮好吃的。但是我还是今天我原汁原味，就是做给大家看。啊，如果你觉得太干的话，你可以加点水，或者是酱油再加多一点，都可以啦。好吧，那我们就废话不多说了，那我们就开始喽。我们来准备打抛肉的配菜，我们来一样来，我们先准备辣椒。这个辣椒要选择不辣的，要完全不辣的那种，我们只要辣椒的香气就可以了。我把它切成小丁，当然不用全部放了，就是我们可能放个几个下去点缀一下，因为全部放看起来有点恐怖啊。辣椒把它切成这种小丁状就可以了。再过来就青葱，青葱也是一样，青葱把它切成一样，都是小丁。切好就是这样子。再过来就是这个不知道是叫青豆还是叫什么豆啊？如果大家知道，请跟我讲一下，因为我也不知道它的学名叫什么。这样子一把可以用很多次，这个拿一根起来就好了。如果是做生意的话，就一次把它切起来了。
The online platform is for tax refunds. Okay, it has not been created on purpose for this particular refund. It's a general reform of the administration getting ready to refund taxes. But it may be one of the tools used to misuse these particular refunds.
Okay, and on the sectoral tariffs and on the reciprocal tariffs, those are not being included in this Supreme Court case. Are those clear and they are undisputed at this point in terms of the levers that this Trump administration can continue to pull?
Yes, because those sectoral tariffs, like tariffs on steel, for example, are covered by a different statutory authorities. They are not within this IEEPA, so those will still stay, and those are actually very much easier to implement than the type of individual tariffs implemented under IEEPA.
Okay, Ilaria, thank you very much. Really important context as we lead up potentially to that decision later today from the Supreme Court. Ilaria De Gioia, law professor at Birmingham City University. Meanwhile, White House Trade Advisor Peter Navarro spoke to Michelle Hussein ahead of the Supreme Court ruling. Someone, of course, has been consequential in crafting those tariffs. He's been speaking to Michelle. Take a listen.
I'm very confident that we have a very, very good chance. I mean, the law is on our side. The law is on our side here. So let's win that. Now, if we don't win, there's the whole alphabet number soup of things we've got.
Would you consider resigning if the case is lost?
Oh, of course not. That's silly.
Navarro also doubled down on tariffs, adding that other countries should follow America's lead.
We are strongly encouraging Europe to adopt exactly the same level of tariffs that we adopt for the simple reason that when the president puts up tariffs to defend America from Chinese cheating, China can't sell as much here. Where does it sell it? Dumps it in Europe, dumps it in Mexico.
You can listen to the full conversation between Michelle Hussein and Peter Navarro. Just search the Michelle Hussein Show wherever you get your podcasts. And European policymakers clearly are aware and sensitive to the issue of dumping, and that is historically been a challenge that China has posed. But particularly when it comes to the auto sector, some tariffs are in place, some are still being debated. The Germans and the French have different consumer groups are going to start lining up to try and get that money, you know, another step along that chain back into the hands of consumers. Whether President Trump might prefer something like that because he's wanted to find
We're still four candidates. It's the president's decision.
Time frame still the same?
I would expect president's going to Davos, I think, in 2 weeks. So I don't know whether
technology of our lifetimes, and I think it has the potential to help us do things literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Minutes past the hour, 50 minutes to go until the opening trade here in Europe. Equity markets broadly buoyant at this point, but US futures are basically at a standstill, waiting for the big risk events of the day. We've already talked about 2 of them, to be honest. What is happening with the payroll number, lunchtime, what is happening with the Supreme Court, if you get the APA ruling, that's going to happen a little later on in the day. There are other risk events out there as well. One of them relates to what is happening in the oil market. US President Donald Trump set to convene a meeting with nearly 20 oil executives. Is happening at the White House, we think. Sources say representatives from Repsol, Exxon, Chevron are all going to be there. Hal Hammond's going to be there as well. Basically, they're there to discuss reviving Venezuela's oil output after President Nicolas Maduro was deposed. So Bloomberg Originals basically has done this. We're looking at how Chevron, which has been there the whole time, has managed to maintain its presence in Venezuela. Take a look.
The United States has carried out a series of strikes against Venezuela, announcing the capture of Nicolas Maduro and his wife.
Nicolas Maduro stood in federal court and pleaded not guilty to narco-terrorism charges.
Donald Trump said his military buildup in the Caribbean and destruction of civilian boats there was about alleged drug trafficking. But following the U.S. attack on Venezuela, another reason has taken center stage.
The oil business in Venezuela has been a bust, a total bust, for a long period of time.
Everything that we've seen during his second administration has been consistent with his view that U.S. energy dominance is key to his agenda.
We're going to have our very large United States oil companies go in, spend billions of dollars, fix the badly broken infrastructure, and start making money for the country.
But one U.S. oil company is already there and has been for decades.
Chevron produces about 25% of Venezuela's oil today, is the largest investor in the oil industry and in the country.
We've been in Venezuela for the last 100 years. Our presence there, we believe, is important for the local economy, the regional economy, the people of Venezuela.
This is a story about the extent to which a U.S. oil company is willing to go through the trials and tribulations of geopolitics in order to stay in a country that has the world's biggest oil reserves.
Chevron has virtually no competition. It has no oversight. And so it's really a very unique situation.
So how did Chevron manage to stay in Venezuela when everyone else left? And what role could it play in the country's future if Trump gets his way?
So that was a little taster. If you want to watch the full thing, subscribers can do so on the Bloomberg terminal or online, bloomberg.com. One of the risk events on today's agenda.
Yeah, absolutely. That meeting then at the White House with oil executives taking place later on today, but we have other risk events to focus in on. Let's talk about them. Bloomberg Markets Live, Skylar Montgomery-Koenig joins us around the desk right now for 3 minutes on the markets. And Skylar, we've only got 3 minutes to talk about all of the risk events that are facing markets today. There's the oil meeting a lot later on today, but before that, we are likely to get the Supreme Court giving its verdict on tariffs, and we are going to get payrolls. What's your focus going to be on?
I think maybe we start with non-farm payrolls because that's very much the big one, and part of it is the context of where we're coming from. So data so far this week, I think, if anything, has leaned on the strong side, but it's been kind of all over the place, right? So JOLTS data, the headline number was quite weak, but the mix between quits and layoffs was strong. You had ISM manufacturing weak, but services strong. And so the market's really looking for direction from the payroll number today, especially given that the March meeting for the Fed is priced at something like 11 basis points. So that kind of, is that going to get pushed out? Is it going to be kind of firmed up in terms of that cut pricing? And I think certainly if we get an inline print, consensus expects a relatively positive outcome, so unemployment rate ticking down, that can kind of give the go-ahead for the equity market to rally because it tells you that the labor of easing is still firm despite that.
Scott, how are we thinking about the Supreme Court, the potential Supreme Court ruling on tariffs and how that affects treasuries? I mean, how much is priced in, essentially, in terms of a potential narrow ruling, if that's what comes through? What is priced in at this point? How much vulnerability is there on that?
I think there is a fair amount of vulnerability in the short term. So the risk here is that the rule illegal and you have to do repayments of the money that's been collected so far. Now, I think the Treasury market in particular has been comforted by the idea that your increased spending that's happening this year is being offset somewhat by tariff revenue being collected. So if we don't have that anymore, then certainly I think risk premium would rise because you get more worried about the deficit. I do think it's more of a short-term reaction than a long-term because there's a recognition that we have other ways to impose tariffs. You know, Trump is very, very happy with what's happened from a tariff perspective in terms of they're no longer seen as just a U.S. growth negative, and they are collecting significant revenues. So I think you do some kind of other tariff collection. That means that there's not a sustained impact. The growth impact is a little bit more difficult to interpret in terms of short term. It could be seen as positive for U.S. growth, which, you know, that means there's conflicting signals for the dollar in terms of U.S. growth positive, dollar positive, yields, negative premium in terms of that's more negative for the dollar. But again, if tariffs are just reinstated in a different form, it just means that maybe you're looking at sectors other than countries.
US 10-year, 411, 420. Where am I going? Up or down?
I mean, this is the problem is we've just been range trading, right?
Yeah,
So for the
in a
front
really
end,
tight range.
yeah, for the front end, I can very clearly tell you that I think the bias is upward for yields because
Okay.
we're at the lows of recent ranges. And I think if you get that strong non-farm payrolls print, which in line with consensus, then it's a very clear direction, especially because the Fed, it's harder to see them wanting to cut sooner if their bias is holding. For the longer end, that bias I think is slightly to the upside, but I don't know what breaks that range until we get some convincing evidence of where terminal is in the U.S. So it's,
You think
you know,
stay in it, therefore?
I think, yeah, we're going to stay in that range as a result. The term premium argument obviously impacts more at your long end, but I think non-farm payrolls, you're looking more at the front end, and the bias certainly for yields is higher today at the front end, particularly because both those risk tariffs as well as non-farm payrolls coming in line in a strong report with the unemployment rate really being a kind of important bit that you're looking at, point to yields being
So that's a flattening of the curve, not a steepening of the curve then.
Yeah.
All right, Scarlett, thank you very much. Indeed, Markets Live, Scarlett Montgomery-Coney on the market risks today. Let's get to some of the individual stocks that could be on the move at the open, bringing Chloe Millet. Chloe?
Good morning, Tom. Let's start with the big story of the day, which is, of course, that Glencore and Rio Tinto are in talks to create the world's largest mining company with a combined value of more than $200 billion. So this is a potential deal that comes at a time of increased deal fever in an industry where companies just cannot get enough of copper. So we'll be watching out for the market reaction there. But at least from an investor's perspective, it looks like this is a deal that is quite doable, with this portfolio manager at Tribeca saying that it is the one big deliverable mining deal out there. So definitely a story to keep an eye on today. Moving on to the chip making sector, and we could have some positive read across from TSMC numbers in that sector. So TSMC revenue came in ahead of estimates, and that really reassured investors that there will be continued sustained AI spending in 2026 despite those fears around an AI bubble. And so we could see that positively reflected in those shares across that sector today, and in particular ASML and Siltronic, which are big suppliers to TSMC. And finally, we could also see some weakness in car makers today after Porsche and BMW were both cut to an underweight rating by Barclays. And so as we can see here, BMW has actually been outperforming this broader autos index, while Porsche has been underperforming it quite significantly. So we'll be keeping an eye on how that picture changes at the open and how much weakness we get in that car making sector this morning on the back of that Barclays downgrade.
Chloe, thank you very much. Chloe Millet with details of some of the stocks to watch. Also keep an eye on the grocery sector. Yesterday it was weak on the back of a lot of, partially weak on the back of some of the negative numbers there. Sainsbury's with a slightly different take on things this morning, so we'll watch that. Also focused on the weather around Europe, here in the UK, but also many other parts of Europe. Interestingly, gas prices going a little bit higher this morning, but European gas heading for a weekly drop because milder weather is thankfully returning.
Yes, looks quite cold in Berlin.
-7 apparently
In Berlin
right now. Yeah, Storm Goretti.
So, but that was definitely that hit Cornwall last night. It's hit the UK. It's coming through. It was snowing when I left the house this morning.
I don't know if Eurostar has restarted, but flights have been impacted. Trains to Paris have been impacted. I don't know if they still are, but there will be travel chaos as a result of this.
There could be. We will try and focus on things that are not chaos in the markets today. Although we have so many risk events coming up, it's hard to think that things might not get
Such an
chaos.
exciting day.
It's interesting. A couple of people still putting the focus on payrolls. Valerie putting more of the focus on the Supreme Court. And really interesting questions about whether the Supreme Court's decision will make a lot of sense to everybody in the short term, whether it'll just open up more questions, not provide final answers, I suppose.
Well, I really hope so, because on Monday morning we're going to need something to talk about. So some confusion would be.
I suspect there'll be plenty there.
And the after-hours oil meeting as well, after the European hours, the oil
20 leaders in a room with President Trump.
Yeah.
He's going to be leading them, maybe physically, to try and get them to invest.
Yeah.
It's an amazing day coming up, and it's unsurprising as a result that maybe actually equity markets aren't doing much into the open here this morning, but there's the potential for significant volatility ahead. An exciting day coming up. This is Bloomberg.
Bringing you up to the minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa with its stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It's snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
$7,000 still feels like a long way away, doesn't it? 69.21 is where we closed yesterday on the S&P. We kind of drifted sideways. Europe went out here, pretty similar levels to where we finished the session over in the United States. Everyone knows that today is going to be a really big day, and I expect actually there's some caution in the market. Volatility is really low in so many asset classes at the moment. You can see it in what is going on with the rate space and the equity space. Yesterday, actually, commodities I thought were the most interesting trade. You saw some metals really being smacked around quite hard, but oil up, which is fascinating.
Yeah, commodities back in focus today for different reasons. You're seeing a little bit of price upside coming through for the likes of some of those precious metals. And to your point, oil is high, so that could give energy as a sector a lift in the European space. Certainly, futures are pricing in gains of 0.3%. Watch tech as well. on the positive number coming through from TSMC and the read across to the likes of ASML and others linked to the TSMC and AI story. European futures then across the benchmark pointing higher by 0.3%. 3100 futures here in the UK looking to add 19 points. DAX futures in Germany up 26 points, flagged higher by a tenth of 8% now.
Tom, let's talk about some of the stocks and sectors in focus, and tech is one of those. You've already mentioned it. TSMC putting tech very much in focus, those better than expected numbers, and saying positive things around the AI demand story and where we are in that. So that's a theme. We'll watch the mining sector, of course, because of the news around Rio Tinto going after Glencore. Will this actually get done? It's 10 years that we've been talking about. We'll certainly focus in on that. Interesting dynamics around copper and Chinese demand to talk about as well. And Sainsbury's certainly in focus after yesterday's disappointing numbers from that sector. Today looks perhaps a little brighter, so we'll watch what happens to the Sainsbury's share price, Guy.
Okay, our markets, our asset classes, a coiled spring waiting to bounce or maybe drop sharply. I don't know. We've been in ranges. It's going to be really interesting to see what the rate story looks like today. I don't think you're going to see much action in equities as we work our way towards the key risk events that are going to be there. London does have something to think about, though, which is what is happening in the mining space. What's happening with Rio and Glencore, I think, is going to be interesting. So it's interesting that London is kind of drifting a little sideways today. Are we going to go positive and negative? It's going to be interesting. I think we're going to be in and out of positive, negative tone. I'm waiting to see what happens with Glencore. The CAC's up a little bit. The IBEX is up a little bit. I'm not sure there's much to see here at an index level. Tom, what do you got at the sector level?
Yeah, unsurprisingly, as you were hitting on, Guy, energy is higher. It's top of the list across the sectors so far. We're gains at 1.4%. Tech is also getting a lift, and again, to Anna's point, not unsurprising given the numbers that came through from TSMC and the read across, and tech up 0.6%. On the downside, healthcare softer by 0.3%. It's a bit of a mixed picture across these sectors, Anna.
Yes, it is. We haven't got the full mining sector story yet, do we? So Rio Tinto is open, and it's down by 2.2%. That's less than it was down in the Australia session, so maybe they'll take that as a win. And interesting that the market sees it that way, because I was reading some comments from analysts that weren't saying it was about the deal, because we frankly don't know enough about the details of any deal, and there is no deal yet. But it's more about what happens to other bits of the business and a lack of clarity around coal assets, for example. So a bit of nervousness there, so the stock goes lower, but only by 2%. On the other hand, Glencore's not yet open, and so we'll see what kind of upside we get, and that could really shift things around from a sector perspective, of course. Basic resources, not one of the best performing sectors right now, but we'll see what the opening of the Glencore share price will do to that.
What is interesting is Antofagasta is higher. So there is kind of, you are seeing some churn as a result of this story. So the copper story does go a little bit higher. So we'll wait and see what happens on that front. I am struggling to discern a clear kind of narrative that comes out of this morning. A little bit of volatility around some of the energy names. They're moving back higher a little bit. BP, Shell.
Because as you pointed out earlier on, over the week, oil prices are higher.
Yes.
So we had a drop actually on Monday on the Venezuelan news, anticipation of more supply perhaps into the US markets. But actually on the week, oil prices are higher, and it's, yes, Venezuela, very confusing, trying to get a handle on that. But there's also Iran, there's activity around Russia and Ukraine, and the market watching those developments very closely.
Well, let's bring in Max Kettner right now, the Chief Multi-Asset Strategist at HSBC. Happy Friday, Max. How are you feeling? What is drawing your attention? What's going to move these markets today in terms of non-farm payrolls or Supreme Court? What are you focused on?
No, I just heard about clear narratives, and I thought, what am I doing here? There we go. Give us one. No, but look, I guess, what's the clear narrative? I think one of the clear narratives is still that actually near-term earnings expectations and near-term growth expectations, I think, continue to be a little too low, right? And that's particularly for the US. When you look at the US, for example, I mean, consensus saying 1% for Q4 and then barely a rebound in Q1. So even if you did say, hey, because of the shutdown, there will be some temporary setback in growth in Q4, but then the logical reaction should be, okay, Q1, therefore will be the rebound. That's barely in the numbers. So I do think really for the next
earnings expectations get revised
both for earnings and for GDP, right? For both,
and then valuations look less concerning.
Yeah, and I do, and it's not just a tech story, because when you look outside of tech, actually, you look at the S&P, 8 of the 11 sectors now for the reporting season that's about to start, 8 of the 11 S&P sectors are expected to be down quarter over quarter. And I'm sort of thinking, sure, fine, there's been a government shutdown, but let's be honest, if you're one of the 500 largest companies in the US, do you care? Even if you're a consumer, let's be honest, if you were there in October and you said, oh, I'm going to buy a car, did you really a month later say, oh my goodness, the government is shut down, I'm not going to buy a car now? Really? Like, right? Why would you? And we see that in the hard data. Now we see that in credit card data. We see that in the Chicago Fed cards data. We see that in a lot of high frequency hard consumption data. That there wasn't, particularly on the cyclical stuff, right? The cyclical big ticket items. That there wasn't really much of an impact.
So the US economy doing pretty well then by your analysis, Max, and the market not necessarily reflecting all of that. So what does that mean for payrolls today when we get that? Does that mean that the market should be looking for a stronger number and for an unemployment rate that does tick down?
Yeah, I think it could be ticking slightly down, no? Because I think some of the high frequency and some of the proxies, right, from the Chicago Fed also point to a slight, slightly going down. The bigger picture, I think, here is that the level of rates, or the level of rate expectations, where it starts hitting risk assets, has clearly moved down over the last 12, 15 months. No? So, to me, the worry that I have is we don't need 3-4 months of more hawkish CPI, more hawkish payrolls. I think one or maximum 2 months is enough. Because obviously, if you look at long end, the long end and then various sort of ultimate terminal rate expectations, we always look at the 3-year, 1 month, so short-term expectations in 3 years' time, that's already at 340. And effective fund is at 365. So effectively, right, you need one rate move priced out, one rate cut priced out, and you're starting to price in a tail risk of a hike. Yeah. That is not great for anything, for spreads, for equities, for FX, nothing.
So do you think the Fed is done then, and how will, we have a very busy White House right now, and the president's not afraid to interfere in markets, and we know he wants lower mortgage rates, we know he wants a cheaper cost of borrowing, we know he wants lower interest rates. What does that set us up for in 2026?
I think that story is a bit overplayed, to be honest. It's great to talk about, but then at the end of the day, I remember 2.5 months ago, there was lots and lots of concern about, but Fed decisions have always been unanimous, and what if it's not unanimous? Isn't that going to introduce all this volatility? And then we had 9-3 in December. I mean, we're all still, it's not like any of you just,
the Fed can withstand rebellion.
So what? Is that rebellion? I mean, would we call the Bank of England being like, oh no, they had a split vote? If the Bank of England is 9-0, none of you sit here on the table like, oh my God, that was contentious. No, fine, then it's 7-2, 6-3, or 5-4. It's the same thing with the Fed. Fine, then it's an 8-4 or a 9-3. Who cares?
Okay. Front end of the bond market, is it mispriced?
Yeah.
In the US?
Yeah.
By how much?
I think up to 50 bips, to be honest. Okay. You look at the front end in the US, let's say December 2026, we're at almost 3%, 305.
Selling twos, yeah?
Yeah.
Okay.
I think
selling tens?
Yeah. That's by extension, right? 30s is probably a different case because of because of supply and other kinds of things. The issue, I guess, with the very long end is that the Fed is already buying paper again. They're telling us we're not doing QE, we just happen to buy 55 billion of paper a month. But it's not QE, which is which makes it really tough. And I get it because I feel very much in the space of every month when we write our allocation updates. Gosh, is this like another Control C, Control V update where I'm just like, I'm saying the same thing in the last few months. Yeah. Don't say that, I'll repeat it. Too late. But it's the issue then, of course, is if I want to say, rates, what could be picking up, or what if payrolls are a bit higher? Sure, maybe on the day there's a negative reaction, but if the Fed buys so much, you can't
reprice the front end by 50 basis points.
Oh, then we're
okay. What do equities do?
Oh, then we're talking. No, if we really,
you just told me that they're mispriced by 50 basis points.
Sure, but it depends on the path.
Okay.
No, it's not about where we end up in 12 months. In 12 months' time, or over the next 6-9 months, is the front end mispriced by 50 bips? Yeah, potentially. Okay. Is that really going to be something that's going to be repriced by 50 bips in 2 months? No, because that's the other good thing. We've got this K-shaped economy, so there isn't this clear picture where you can say, okay, payrolls today might be surprising.
But rates are going higher.
Yeah.
You started this conversation with Anna telling us that equity markets are going to do well because actually earnings estimates are too low. Which is more important, higher rates or earnings estimates for the equity path this year?
I think for this year, it's a bit like 2018. I think it's actually the rate side of things.
Okay.
Right? Because
that sounds negative equities to me.
Yeah, of course. But it's is it one where you say, okay, we are definitely going to price in hikes at some point? No. I think it's probably much more sort of a ping pong game where you say, oh God, there could be a tail risk of high priced in because we have 1 or 2 months of stronger payrolls, 1 or 2 months of higher CPI, and then the month after you realize, oh, actually, no, there's still these cracks. Let's price it's sort of there's pink choppy, right?
Yeah,
It's
but
choppy
what
is
does that mean, because earnings will come through stronger as your expectations, but rates will come up higher.
Yeah.
Okay. So
Which means valuation probably going overall a bit down, right? But that's not going to be the earnings side of things. It's going to be the driver now at the beginning because the earnings expectations are so low. But overall for this year, the other thing which I think which is completely missed, which I don't understand in the 2026 outlook. So one of the things I really struggle with the 26 outlook is people saying, oh yeah, AI is going to broaden and the Fed's going to cut rates once or twice more. So basically, wherever you invest, you're going to make money, whether it's rates, whether it's EM, whether it's carry, whether it's cyclical currencies, whether it's equities, whether it's tech or non-tech, doesn't matter. Just buy something, right? Is basically the outlooks. The worry I have is, let's be honest, the big beautiful bill, right? The next 3-4 months, really positive. Because we get the tax rebates, right, in February and April. We get the consumption effect broadly, so it's really good for consumption.
Yeah.
The CapEx incentives, really good for AI. The issue I see is, when we think from 26 to 27, we're forward looking, right? We can't just always look at, the 8th of January, sorry. 9th of January.
Well, yes, I know.
See, and I live in the past.
Yeah.
But you look at the 9th of January, it's like, this is what I care about. No, I think there is going to be a time around the summer when we think, hold on, isn't there a potential that actually monetary is done? We don't see any more rate cuts coming in 2027. There might be a risk of a rate hike. So we're moving from monetary tailwind to headwind in 27. Fiscal, the same. We get a negative fiscal impulse and a negative capex impulse. That's the worry I have around really from an earnings perspective, also in the summer.
Okay, and that ties in a little bit to the energy space and what we expect to see there, and there's been plenty of news flow around that, drifting higher oil prices. You've told us that you're underweight energy.
Yeah.
Is that a conviction around, the surplus story just continues to play out and that's all that matters?
Yeah, pretty much. It's very little to do. The problem is on the political side, or let's say Venezuela, I don't have any insight in that. And like you said, let's say if on Monday or on Sunday we would have known what had happened, would we have been short oil this week? Yeah, and we would have lost money.
Right.
So it's the political side is very hard to gauge. I think the surplus and the fundamental story of oil is probably much easier to gauge. So can we, go maybe tactically a little bit below 60 on Brent? Yeah. Is that the space where I would close it out? Yes, absolutely. I think that we almost have no oil in our allocation. We're almost completely out. We've been like that for almost 12 months. But I think once you get to the sort of 55 levels, it's tough to get even lower because, of course, shale doesn't make money at these levels.
I think we're done. That's quite all the things. Max Kerner, thank you very much indeed. Max Kerner, Chief Multi-Asset Strategist, joining us from HSBC. Let's take a look at what's happening with European equities. There's a few interesting moves out there this morning. Certainly the mining space is fascinating. There's a few big moves in the banking space as well, which are worth watching out for. But broadly across the board, we are bid, as you can see. Tech is actually leading us. ASML is up by over 2%, well over 2%. China's rallying a little bit as well. But yeah, it's a good day, pretty much for everything by the looks of things. Let's try and figure out whether that is really across these markets a good thing. Let's find out. Let's have Nelly.
Good morning now. We are seeing for the mining sector, shares go into two different directions for Rio Tinto and Glencore after the two announced plans or talks to create the world's largest mining company. And we are seeing Glencore shares reacting really positively to that, with up almost 8%. But then Rio Tinto is a little bit weaker this morning. The deal is all about gaining more access to copper, which is a metal that's been hitting new record highs and is really important for both the energy transition and also the AI boom. And it seems that Glencore investors are quite keen on this. Rio Tinto investors maybe a little bit less so. We'll be keeping an eye on that going forward. Moving on, but staying in the mining sector, Antofagasta was raised at Goldman, and then also it is benefiting from the fact that the Trump administration is planning to overturn a mining ban in Minnesota, and so that would benefit one of the big projects that company has in that state, and therefore we are seeing those shares move a bit higher this morning, up about 2% for Antofagasta. We're also seeing some positive movements for the chip sector. This is due to the positive read across from TSMC, with the numbers coming in ahead of estimates, which reassured investors about AI spending, given all the fears around this AI bubble. And therefore, we are seeing ASML in particular, which is a key supplier to TSMC, move higher almost 3% this morning. Moving on to L'Oreal, we also have a green there as well. It was upgraded to a buy by UBS analysts, and therefore we are up at 3.6%. And finally, the only stock that we're talking about today that is in the red is Sainsbury's, because it reported weaker than expected sales. This is following these similar numbers that we had from Tesco yesterday, and shows that maybe shoppers in the UK wanted to get cheaper groceries for their Christmas shopping and went to Aldi and Lidl a little bit more than they went to Sainsbury's and Tesco, and therefore we are seeing some weak Christmas trading for those companies, for those supermarkets, and we are down 4.3% for Sainsbury's this morning.
Okay, Chloe Mallet on some of the stocks on the move today. Chloe, thank you. Coming up, and Chloe, we're talking about the mining stocks, of course. Glencore soaring and Rio slipping as the two are in talks to form the world's biggest miner. Those conversations are back. We're going to take a look at the likelihood of a deal and what it all means for the broader industry. That's next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
Oh, there you go.
This is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
What is going to be the consequence for U.S. markets?
We'll see money skates across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets,
From the micro to the macro,
covering retail, entertainment, the business of sports.
the supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld,
And I'm Romaine Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question. Very good question.
Interesting question. Good question.
Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
17 minutes past the hour, 18 minutes past the hour. This is what equity markets look like. A little positive. Hey, could be worse. There you go. Up again. There's some interesting stories, obviously, in London today. There's actually some interesting upgrade stories which are affecting the market as well. Look at what is happening in some of the French banks. Definitely removed as a result of some upgrade downgrades. So just keep an eye on kind of what broker notes are doing as well to the market this morning. The really interesting corporate story this morning is what is happening in the mining space, and London-listed shares firmly in focus. Reports that Rio is once again in talks to buy Glencore, create the world's biggest mining company. The new entity will have a combined market value of over $200 billion. The news, of course, today comes a little over half a year after the last set of talks collapsed. So are these ones going to be any more successful? Is there anything changed here, significantly changed here? Is it going to be harder maybe to get a deal done? Bloomberg's Mark Burton, who leads our EMEA mining and metals coverage, joins us around the table. We've been here before. Why is this time different? Could it be different? Are the challenges greater
2014, there was a move by Glencore to put itself in play, discuss that deal. That ended quickly and acrimoniously with both of the companies kind of engaging in a bit of a shouting match. That underscored the gulf between the two cultures of the company. 2024, they I think had more kind of robust and comprehensive discussions about how a deal might get done. And I think the stumbling block there, among other things, was principally around valuations. Copper deals are a great thing to do, but they're also incredibly difficult to get done because the industry is universally bullish on copper, and it means that whenever these two kind of companies come together, the bidder doesn't want to overpay, and the target doesn't want to be accused of leaving money on the table in an environment where everyone is kind of picking their targets for where copper prices might go.
Absolutely. And that's very much a talking point at the moment, isn't it? More on that perhaps in a moment. But what about the fact that we've got a new CEO at Rio Tinto? What does this tell us?
So I think they both had investor days in December. Glencore was setting out its stall as a copper company, has a huge amount of growth after periods of kind of slumping output in its copper business. It was basically saying, look, this is our focus. This is what we offer you. People have kind of interpreted that as a process of it opening itself up for a company like Rio to come and take over. Rio, meanwhile, under its new CEO, presented a much more kind of internally focused proposition where it was going to be developing its own assets. It's just brought this massive new iron ore mine into production. It was a much more kind of conservative pitch to investors. Now we have a different proposition, potentially creating. Yes, exactly. So, but then behind the scenes there were, I think there's an effort to simplify the business in a similar way to focus on copper, and I think there's for both kind of Rio and its rival BHP, there's a kind of period of softer growth in copper ahead, and I think among their investors there's perhaps a greater mandate to go out and do these types of deals to quickly bring on copper at the time when prices are reefing in.
Okay, thanks very much, Mark. Plenty to talk about this morning. Mark Burton from Bloomberg with the latest on M&A in the mining sector. Plenty of risk events on the agenda for today. If traders look ahead to US payrolls, the US Supreme Court opinion day, possibly, on tariffs. Let's bring in Bloomberg's Valerie Titel to set us up for all of that. You were more excited earlier on about the Supreme Court. A couple of guests who were focused. Oh, a couple of guests who were focused on non-farm payrolls. You think the drama in the Supreme Court then, Valerie?
Well, I think, okay, there we go. I've got someone on my side. But no, I think that there is going to be lasting, historical ramifications from this decision today. In terms of the limits of presidential power. And I tie that into the news of the day that Trump obviously cares about the mortgage market. He wants to buy these mortgage bonds. He's talked about declaring the housing market an emergency. He would do that by using IEPA. And IEPA is what is on the bench for this Supreme Court decision today. Has Trump overstepped his use of this Emergency Powers Act in order to enact these tariffs? So I'm interested in it from that big point of view. I'm also interested in it because, if these tariffs are smacked down, what does all these other countries do who have signed these trade deal commitments with the U.S.? If Trump does enact Section 122, which is essentially another placeholder that he can enact if these IEPA tariffs are struck down, that is a blanket 15% tariffs on everybody. So those who are maybe negotiated a lower one, what do they do? Those who negotiated, and this is maybe a deal for them, how do they react? So I think it does start to pose some bigger questions on, more volatility, at least when it comes to the tariff situation, the trade deal situation with the Trump administration.
When it comes to jobs, and I know that's less of a focus for you than the tariff story, but in jobs, is it the headline number, is it wages, or is it the unemployment number?
Look, I'm looking at the unemployment rate, and I say that for a few reasons. The headline number has been very volatile of late, has had a lot of revisions. I know we've all talked about the lack of quality in the data. So look at the household survey when it comes to the unemployment rate, because I think that what the market is voting it was on last year. Perhaps it's starting to tighten again amidst all of this economic positivity. The AI trade maybe becoming more of a positive for the labor market. That could cause some big changes to how we're viewing the Fed this year. I mean, that could really put hikes on the table for the Fed, and I think that's what the market is vulnerable for. If we see the labor market healing, the unemployment rate drop down to the 4.3 kind of territory, I mean, there would be an argument to be looking at hikes.
Max Kemper thinks 50 basis points mispriced at the front end.
In which direction?
Up.
Yeah.
Does he think, how much of a cold spring is the market? You get out of the recent ranges, how quickly was this off?
The data on the labor market has been very cloudy of late. It's been very hard to tell whether we're still weakening or not. And once we get that kind of clarity, if it's in the direction of the labor market strengthening, you have these bullish GDP figures already from the Fed for this year. Add into that what the Trump administration is planning on spending, this fiscal boost, there could be real arguments that the U.S. economy is about to take off.
Valerie, stay with us. What are you up to for the weekend? We have time to talk about
Let's ask Valerie that question.
our weekend. We are going to talk about our weekend, which for some people will feature skiing and plenty of sport. Probably not for Valerie. I would advise against. But watching the Golden Globes, that seems like a safe activity.
You have to stay up late for that, don't you?
You do. That's on a Sunday, actually. Yes, so I won't overcommit to watching the Golden Globes.
Monday morning, that's what we're going to be talking about.
Yeah, I see guys in alpine skier, salopettes.
Yeah,
very much
just come back. Where are we this weekend? I can't remember where we are this weekend. Anyway, yeah, the downhill's going on. That's going to be I nearly did, but anyway. Neither here nor there. But yeah, loads of sport this weekend. Fantastic sport this weekend.
So the quarterfinals of the Africa Cup of Nations. So Mali, Senegal today, Cameroon and Morocco today as well. 4 p.m. and then 7 p.m.
He's been doing research.
Quarterfinals.
My research is focused entirely on the Golden Globes, so I have nothing to add on that one.
So you're going to be the fashion correspondent on Monday morning.
Absolutely. I'm all about the front runners for the Oscars. It's very competitive this year. Tom's been watching the tech story though, as ever.
Talking of entertainment.
So we're done. So our weekend starts now. Our weekend starts now. This is fantastic.
You go off, enjoy your weekends. That's it for the
So Val's away for a few months. She's got somewhere to go.
Yes, maybe the hospital, but all for good reason.
Yeah. The tech show is next. The tech show is next. Entertainment, music, AI, Will I Am, exclusive interview. That's coming up. Bloomberg Tech Europe takes a deep dive into how AI is shaping the music industry, what it promises, some of the consequences for the makers of music, of course. That's all coming up. Exclusive conversations. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. And we have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas from Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance. Technology is embedded in every aspect
entertainment, and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
You are watching Bloomberg Tech Europe. Coming up, the future of music is here, and AI is at the centre of it. Whether it's artificial artists or remix records, AI is expected to have pretty far-reaching effects on music making. But is AI a threat to the established music model, or should it be seen simply as another tool for creatives? Grammy winner will.i.am reveals how he sees artificial intelligence reshaping the industry.
It's not doom and gloom for the music industry. I'm more worried about my accountant than I am my drummer. I'm more worried about my lawyer than I am the singers and singers.
So we will be joined by music heavyweights as we zero in on the challenges, the opportunities as well lying ahead for an industry facing arguably its biggest test since the onset of streaming. Welcome to Bloomberg Tech Europe. From streaming apps then to recording studios, artificial intelligence. It's not just remixing the music industry, it is rewriting the entire score.
How was I supposed to know what love looked like when my first man left before I learned to fight?
Could you tell that wasn't created by a human? The track was generated by Zania Monet, an AI artist who made history as the first AI-generated musician to chart on the US Billboard rankings. If you couldn't tell, you're not alone. French music streaming service Deezer found that nearly all listeners cannot distinguish AI-generated songs from those made by humans. A new wave of AI music companies is leading the charge. Platforms like Suno, Udio, Loudly, and Musico let anyone create fully produced songs in minutes. No instruments, vocalists, or studio time required. The global market for AI-generated music is booming. Research firm Grand View predicts growth from $440 million in 2023 to nearly $2.8 billion by 2030. But not everyone is harmonizing with the trend. Artists warn that AI could flood platforms with synthetic songs, drown out human creators, and mimic famous voices without permission. That concern has fueled a growing campaign against AI music, including calls for clearer copyright laws and protections for artists' likeness and style. Still, the industry isn't just fighting, it's adapting. Major labels, including Warner Music Group, are partnering with AI companies like Suno to explore songwriting, production, and fan engagement tools. For now, AI music sits at the intersection of innovation and uncertainty. Whether it becomes a powerful collaborator or a disruptive rival, the industry is bracing for a future where humans and AI share the stage. So, AI is a divisive topic then for the creative industries. Some musicians seeing it as existential, but for will.i.am, artificial intelligence is an opportunity, not a threat. The Grammy-winning singer, songwriter, and producer first found fame, of course, in chart-topping hip-hop group Black Eyed Peas. He is also the founder and CEO of FYI AI. It's an AI assistant specifically aimed at creatives.
Absolutely. You're being interviewed by Tom McKenzie from Bloomberg, focusing on the dynamic intersection of AI and creativity. It's a deep dive into how innovative AI solutions can coexist with and enhance artistic expression, while also addressing broader industry implications challenges like job displacement and data practices. You've been sharing insights about FYI's approach to harmoniously integrate AI with human creativity and discuss the pioneering work with ASU involving the Agentic Self course.
I spoke to will.i.am about how he sees AI shaping the future of music.
It's a renaissance. The same way the Renaissance, catapulted, dimensionalized the creative industry in the past. The Renaissance, this new Renaissance, will do it for this era that we're in. So it's the age of the hyper creative.
So there's a copyright law change that the UK government is thinking about making to ensure that the models and the AI companies here can innovate quickly and use copyrighted data more freely with less risk of legal response to that. And so the artists, including Damon Albarn and Annie Lennox, put out this silent album in February as a protest to say this is gonna be a problem.
Yeah, so the artists that are protesting have every right to, right? Because say for example, Coca-Cola wants to license your music, or McDonald's, or Starbucks, or some politician running for office. They want to use your music for their campaign. You have to license that, and the artist has to sign off on that. So if artist music are in some overall catalog, and the artist didn't say yes, you can use it however you need to use it, whether it's to play it, associate it, or sign on it, the artist should do that. The thing the artist also has to know is we're at a point where they don't have to trade on their music. Theory is theory. And the model's going to get so sophisticated that it's just going to train on theory. And because it can predict, and songs can be broken down into predictions based on theory.
But licensing copyrighted music is possibly a solution for these AI models that are training. And so far, a number of them are trained, the allegation is, a number of them are trained on copyrighted music without compensating those artists. And licensing could be the solution.
Licensing is a solution. But what is the value of those recordings and those copyrights? So that's the heavy one. We licensed our music to Spotify. They don't value it the way that it should. And that brings upon another conundrum. A song is worth how much? A stream. So you can license it, but let's hope that the folks that are divvying up its value and its worth love it and appreciate it and price it for what it actually costs. As far as time. But the model is getting better and better and better. It doesn't have to learn from the past to create.
Are there specific guardrails that you think about that should be implemented when it comes to protecting creatives in this time of momentous change as a result of AI?
Yeah. First off, the reason why we're having this situation and the conundrum that we're in is because the data practice overall. The data practice, not just for music, everything needs to be thought, and humans need to be protected. You came at it from hey, what about music? What about how you interview? Bloomberg says, we really like how you do that. We want an avatar agent to do exactly. Do you own how you ask questions? So right now, the easy way to look at it is you musicians in your songs. Everybody. Everyone needs to be protected. The sellers, the storytellers, the lawyers, finance people, human resources at the company, everyone. It's a human, urgent matter to where we need governance and regulation ASAP. Not to stifle creativity, but just to make sure the business model It's the business model that's the issue, not the tech, bro.
In 10 years' time, are we listening to more AI-created music than human-created music? How do you think about that?
You like fruit?
Yeah.
You go to the supermarket and you say, hey, where's the organic oranges?
Sometimes.
But then you just buy oranges.
Yeah.
So if you're not buying organic oranges, then what the are those oranges that aren't organic?
Yeah.
Why wouldn't you have to call these organic and those just oranges?
Yeah.
If these are organic and that, what are those? Only reason I'm saying that is just process to the point where you need to identify organic from non. The same will be for music. The same will be for everything.
It'll be on us, the consumer, to identify what is synthetic, what is AI-made music, and what is human-made. Or does it need to be labeled?
I'm trying to elevate this conversation to everything. I'm starting with oranges to organic oranges, to music to organic music, to interviews to organic interviews.
There's going to be a premium in terms of the human experience in this new AI world. Things like live experiences, live concerts, live sport. Is there going to be a premium for that kind of entertainment?
It's called lived experience. AI is not living. So when you go see yes, there's going to be lots of music. It's going to be AI bands. That's true. It's going to be like an AI freaking Bruce Springsteen. There'll be an AI Lana Del Rey. There'll be an AI freaking Adele. Yeah, it's going to sound great. People like it. And you're going to go see it perform live. And the team that makes a live performance is going to be freaking, it's going to be dope. And then there's going to be human lived experience that you're still going to love. It's not doom and gloom for the music industry. I'm more worried about my accountant than I am my drummer. I'm more worried about my lawyer than I am the singers and singers. Because that's law of memory and numbers. There's a $100 billion industry, if not more, launching freaking agents and co-pilots. Then there are the record industry launching AI artists. Get out of here, bro. Let's break it down to the real what's going on. So I'm more concerned about my assistant than my guitarist.
Yeah, clearly you work in philanthropy, in music, in design, across all of those different sectors, as well as tech, of course. Of course, all those different sectors. Where do you expect to see the most disruption as a result of AI, or is it across the board the same?
The creatives are going to be all right. Hey, we're going to be cool. They like this, they like this. They want the heart. And stop chasing the algorithm on TikTok. Like, rinse your soul out. And people want that. We're going to be cool. But as cool as we are, we're going to be writing songs called Where Did the Humans Go? And then they're going to come to our concerts to hear that.
The one and only will.i.am, the founder and CEO of FYI AI. Coming up, streaming then, currently the dominant model for the music industry, but will that last in the AI era? I'm going to discuss with Jessica Powell, co-founder and CEO of Audio Shake, a firm whose AI software can separate and then reimagine existing audio recordings.
Again, I think one of the big challenges is how are 100% AI generated tracks treated on a streaming platform. That I think is the biggest challenge and something that really does pose a potential threat to artists.
Plus, we will be joined by Helen Lindvall, songwriter and president of the European Composer and Songwriter Alliance. Can the industry survive and thrive as AI takes off? That is next. This is Bloomberg.
companies with market caps of $5 trillion. You don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly, a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ took 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there will be rebalancing, and it's hard to call it because the technology trend and the investment is real.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Tech Europe. So, artificial intelligence is being used across the music industry. We've established that. One company that is thriving is AudioShake. Its platforms use AI to split audio recordings into individual parts, separating music, voices, and effects. Its customers then can take those recordings that were once locked in their final form and reimagine, remix, and repurpose them. Jessica Pound, AudioShake's co-founder and CEO, says the threat is not from AI tools, but the mass rollout of music made solely by artificial intelligence.
The real controversy tends to be with generative AI, both in terms of how that music was trained, which tends to be it was scraped from the internet, but how it was trained, and then the fact that the outputs could potentially be regurgitating original lyrics or compositions, and two, are those tracks, those outputs, competing with the people who created the inputs, the human artists? So that's where it's a bit sort of different debate from what happens with a lot of the more day-to-day AI tools that are being used by the industry.
Are you comfortable with those AI music models, those generative AI models training on copyrighted material?
The part that I think is really interesting, and I think we're going to have to see how it plays out, is how AI-generated tracks exist in a marketplace, meaning streaming platforms, alongside human-created works. And when I say human-created works, that can also mean works that humans created with the assistance of AI, but where, let's say, humans are driving the majority of that track. I think the real threat around generative AI is not a producer who uses a generative music system and, generates a vocal when they've built this amazing track, or, adds this element, asks a generative music system, find me a beat, create a beat for me that does X or Y, right? And then they're building and adding all this human creativity on top of it. I mean, that is the history of music technology, right? The people interact with tech, they build new and crazy things. I think all that is going to be fine. But again, what happens when you are able to use technology to generate music at scale and hit streaming platforms with a tremendous amount of music, and that music is competing for listeners? There's already a problem in the music industry today around streaming fraud. That was already a problem. It preceded generative AI, again, also enabled by technology. It's essentially fraudulent tracks that are just there so that bots can click on them and then collect revenue. So that, to me, is the most interesting question, which is how do you take existing music industry problems, right, like streaming fraud, and the inability to always be able to detect remixes. All of those kinds of problems are all just amplified by the existence of generative AI. So I think that's the really big challenge here.
So in the here and now and then into the future, Jessica, do you see these kind of tools, these kind of changes, these kind of innovations changing the music industry, the economics of the music industry, not just for artists, but also for the labels?
Again, I think one of the big challenges is how are 100% AI generated tracks treated on the streaming platform? That I think is the biggest challenge and something that really does pose a potential threat to artists. Already did, but now is amplified through technology, which in this case is generative AI. And so if you look at Taylor Swift, I think it's very hard to automate Taylor Swift, right? Because it's not just the music, it's also everything else she does and her interaction with fans and her tours and so forth. And so there will be AI artists, definitely, but I don't think human artists are going to completely disappear.
That was Jessica Brown, the CEO and co-founder of AudioShape. So the record industry is, of course, as we've been discussing, in the midst of a deal-making spree as well when it comes to AI. Major labels including Universal, Warner and Sony have either struck deals or settled with AI music companies in recent months. Many of these agreements will allow users to remake popular songs using artificial intelligence tools. That has drawn the attention of the European Composer and Songwriter Alliance. It says licensing is a good first step, but has called for greater transparency over the deals. I'm joined now by the group's involved, an award-winning professional songwriting musician and columnist. Elliot, thank you for taking the time to come in and your role, of course, on that front and the lobbying role that you're taking. What do you make of these deals then? Is this not important in terms of trying to address some of the concerns of songwriters that the labels and some of these model and AI companies are now partnering?
Absolutely. I mean, licensing is the first step. Without licensing, there is no money flowing back to music creators. But transparency is so important, both on the AI company side, so we know what is being scraped and what is being used, but also when it comes to the labels, how are these deals, how's the money that is flowing in going to be distributed? Is it going to be distributed to composers and songwriters? Where's the transparency here in what is being used? Because in the end, it is about the roots of the industry, which is the composer and the songwriter.
Yeah, and we saw evidence recently of just how far this technology is evolving in terms of its partnership and how it's working with music, the upside and the downside, and we can talk about that. Universal, for example, partnering with NVIDIA, and they say that this is about music discoverability, and NVIDIA, given its role in terms of AI chips, how important what do you make of a deal like that? Is that a move in the right direction, or does that cause you concern?
To be honest, we have no idea really what the deal entails. There was a lot of things about creativity as well, and then obviously on the composer and songwriter side, we're looking at, well, if a music label owns the catalog, are they going to train on that catalog eventually themselves and push out those pesky music creators that come and complain about their money not flowing through?
What is the impact right now that you're seeing across the industry?
Well, there's a lot of fear, obviously. There's a lot of passion among songwriters and composers. We are seeing, obviously, on streaming services that there is a lot of AI. Deezer said last year that they have between 50 to 70,000 fully AI-generated tracks being uploaded every single day. Now,
are they being labeled? Do we know as consumers?
Not being labeled at all. Many times with Spotify, for example, I realize that I'm having all the AI-generated tracks recommended to me. And I only find out because maybe I look at the name and I'm like, oh, I haven't heard about this artist before. And I try to Google and I realize that actually it's not a real artist. And I think that's really, really important as a music fan, as a consumer. Will.i.am said earlier, do you want to have organic food or do you want to have processed food, but in a much more do you want to have a human creator behind it? I think it makes a difference to a lot of music.
And one of the points from Will.i.am is this has to be targeted at the business model. The regulation has to be targeted and focused on the business model rather than stifling innovation. And his concern is clearly that innovation could be stifled. The EU AI Act, is that the right way? The tools there in Europe to protect songwriters?
Well, the AI Act in Europe is very toothless. It's very insufficient when it comes to copyright. They have the code of practice, for example, is voluntary. So you don't have to sign up to it. And even if you do sign up, it's a very weak copyright commitment with that. And the transparency in the AI Act is very high level, very general. So it's impossible for us to see if our works have been used or not. We are looking at it and saying, and a lot of EU member states are looking at the situation and saying, well, let's face it, we can presume that copyrighted works have been used because there's been hundreds of millions of works that have been scraped across the internet.
There's been a lot of buying of music assets in recent years by private equity firms and companies like Hipgnosis, buying the rights to names like Bob Dylan, for example, Neil Young, amongst others. Do those assets become more or less valuable?
Well, it depends, doesn't it? I think this is where they're in the same boat as us. If they need to support copyright and support the music creators, songwriters, and composers. I think a lot of the time, the songwriters and the composers get lost in this discussion because, oops, sorry.
That's okay.
Because we are invisible to a certain extent, and a lot of people think, oh well, a piece of music is created by one person, and there are people that are actually behind these songs.
Really important insights. Thank you very much indeed. Helen Lindvall, President of the European Composer and Songwriter Alliance. And on the next episode of Bloomberg Tech Europe, we're going to dive into the world of quantum computing. Can it supercharge the AI boom, or is it all bluster? We're going to speak to the company's leading efforts to master their cutting-edge technology. Catch that episode on February the 13th here on Bloomberg TV. That's it for Bloomberg Tech Europe. The Pulse is up next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people,
This is the future. This is the 21st century economy.
the transactions,
It snatched up nearly $1 billion of Bitcoin.
and the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Versace in Beirut, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The Open Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards,
And I'm Tom McKenzie. This is your opening trade.
only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
From public markets to private markets,
From the micro to the macro,
covering retail, entertainment, the business of sports.
the supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're we're covering it. I'm Katie Breisfeld,
And I'm Romaine Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
Glencore jumps after confirming that it's in talks to be taken over by Rio Tinto in a mega merger to create the world's biggest mining company. Now, the U.S. president says he plans to meet Venezuela's opposition leader as soon as next week, as the U.S. military prepares to hit drug cartels on land. Plus, TSMC is a go-to chip maker for NVIDIA, reports better than expected sales, reinforcing hopes that global AI spending can be sustained. Now, good morning, everyone. Happy Friday. It's been a very long week. I know many traders will probably need a second espresso this Friday morning. Look, a lot of traders are bracing for two back-to-back risk events today that may sway the mood of the market in the near term, marking one of the biggest tests possibly for global equities. One, it's the U.S. payrolls for December. Very important to give us clues. You can see S&P futures practically flat. The U.S. 10-year 4.1831. And then the other story, of course, is the Supreme Court could decide the fate of most of Trump's tariffs as soon as today. That could also be delayed. Brent crude, we keep on staying on top of geopolitics, 62.48. Let's also take a look at the European markets map. We're expecting actually the main bulk of the move to come from the U.S. because of the Fed, and that will probably filter through the European markets as well. We're seeing a bit of green, but they're really practically unchanged. Maybe the CAC and the FTSE here in the UK are doing a little bit better than the others. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, London-listed mining shares are on the move, with Rio Tinto falling, Glencore jumping, as the two discuss a tie-up to create the world's biggest miner. Now, the new entity would have a combined market value of more than $200 billion. The news today comes a little over a year after earlier talks collapsed. We're joining us now for more on all of this is Mark Burton, who leads RENA Mining and Metals coverage. Mark, first of all, is it a done deal, or actually are there quite a lot of hurdles?
I think it's fair to say there are a lot of hurdles. Yeah, these are very preliminary talks. I think the reaction that you've seen, particularly in the Australian market, to the initial news with Rio shares falling, reflects the fact that there's very little known at this point as to the precise terms of the deal. And I think that if and when we get a full offer, we'll be able to kind of gauge more clearly what the viability of this deal might be. On the face of it, there are a few kind of long-running obstacles that have kind of thwarted a deal like this in the past. In 2014, they briefly gave it a go. In 2024, they did so again. Then I think valuation was one of the key issues, and I think it will remain so this time around. The logic for combining the businesses is
It's cover. I mean, Mark, this industry, right? Your industry, it's never dull because they're kind of like in a M&A fever.
Yeah.
And we've heard BHP was trying to buy Rio, that didn't happen. They went for it twice. Rio's looking at other stuff. I mean, it's all about copper. Everybody wants copper because we need more copper for the energy transition.
Yeah, absolutely. And the Anglo-Tech deal, I think, has kind of sharpened that focus on copper, and throughout the industry, there's kind of universal bullishness on the outlook, which is it underpins the logic for doing this kind of deal, but it also creates that potential valuation gap where everyone has very high expectations for the prize.
Right. And it also means that others could come in. I mean, could they?
Well, I mean, it's such a huge deal that to buy Glencore as is, enter a bidding war with Rio Tinto, the number of interlopers is probably fairly small, but BHP obviously is the current incumbent, the world's largest mining company. I think that's the one that everyone would look to. It similarly is very focused on copper, like Rio Tinto. I think its investors are more open to a big bang acquisition that would very immediately boost its copper production, even though BHP is huge in copper already. already today, and that is another aspect of it. A fresh angle is this intense geopolitical focus on copper as a scarce and incredibly important industrial resource. So governments will be watching on.
Mark, thank you so much. Of course, we'll have plenty more from this huge potential deal with Mark Burton. Now, it could be an especially volatile day for markets as we wait for pivotal U.S. jobs report and potential Supreme Court ruling on President Trump's tariffs. The December non-farm payrolls data is being seen as the first reliable reading on the economy after weeks of data affected by the government shutdown. Well, the Fed Governor Stephen Mnuchin told Bloomberg that his rate cut expectations for this year to boost the labor market.
I'm unsurprisingly the lowest dot. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation.
Well, let's bring in Ludovic Subran, he's Chief Investment Officer and Chief Economist at Allianz. Ludovic, first of all, Happy New Year. It feels like we've had like 3 months in the last week, so congratulations for making it to Friday. How big of a deal this is? I mean, this could, it could kind of change what equities do, given it's a big important payroll number for the Fed to give us estimates of what they expect to do next.
Look, it will give us certainly a little bit more of information after what we call the fog of war when it comes to the data releases in the US over the past few months, right, including on GDP, on jobs, on inflation. So I guess we expect the non-farm payroll to confirm that the job market is far from stellar, and that will certainly continue to groom a bit of the dissent on the Fed board that there needs to be more cuts, what markets have been expecting all along, right? So this whole idea that it could be an additional 50 basis points of cuts in 2026 compared to what was expected initially. We are still in the camp that the US economy is still running hot, especially when you look at markets and when you look at growth. But again, those numbers are to be taken with a grain of salt, and it is very hard because remember, the Fed is all about data dependence, but data is not dependable. You have a bit the situation now, which is going to be very politicized space, and you heard Steve Mnuchin on his view, which is a very dovish Fed going forward for sure.
You said the U.S. economy is increasingly running on 2 speeds. Does that accelerate and bifurcate even more?
Look, clearly the geopolitical situation, plus the AI transformation, plus the policy mix of the US is exacerbating the K-shaped economy of the US. I mean, markets are really taking the lion's share of the growth created in the US right now, mostly because the expectations are in a sector that is a listed sector, and that is, capital gains trumping wage gains going forward at a time where inflation is not under control in the US. So yes, I do believe that this dual speed economy will stay and will continue to be a major impediment to the good conduct of policy, fiscal and monetary going forward for the US for sure.
Ludovic, I mean, when we see everything that's been happening over the last week and actually executive orders, a lot of the things, Venezuela taking a lot of chunk of time, not being priced into any real market, does it change your outlook economically in 7-8 months if these things accelerate, if we have more shocks, or is the world strong enough to deal with it?
Look, clearly, from an investment perspective, we have a risk of tilt that is clear, mostly because, this K-shaped economy is not something that lasts often, so there is a risk of correction that is there. What would be the trigger and how would it be unfolding is very, very open. There is the talks of the AI bubble have been put to the back scene because now G-economics is back, but the question of hedging all of that is really, I think, what most investors should be worried about. I just give you one example. What's going to happen on the Fed and the May pivot of the Fed will be essential to understand anything from govies to credit to equity to the contagion that the US economy could have on the rest of the world, because the Fed is still the nexus of all the financial cycle, and the monetary and financial conditions have been behind a lot of the who's-bound markets, right? So yes, it is something, the next months are going to be critical, but I have the impression we've been saying that for now a year and a half. So it's something that still keeps us a bit of a ramp, or at least on our toe. And this is also a good place to make money. So this is a bit a double-edged sword of the situation. You need to be very agile, but there are good opportunities, and there are also things that needs to be completely scrutinized there, for sure.
Yeah, I mean, for me, the 2 two big surprises of 2025, apart from the fact that the third one is that Italy's so bad at football. But, you know, the two ones is, first of all, when you look at tariffs and trade, actually the world moved on and it was fine. And when you look at, you know, maybe some of the surprises, they were much better than expected. And the second one is also that if you look overall at the global economy, I mean, it's much more resilient than we thought. Does this continue to 2026?
To answer your question, you need to understand the reasons behind. I think on trade, for example, I still do think that there is a second layer to the trade cake that is going to be very visible and very bitter in 2026, especially as middle-class Americans fight against inflation in an environment in which the Fed will maybe be more dovish just because of the casts on the FOMC. So I'm not sure that it's completely done, but the reason behind is because the trade at stake is less than 10% of global trade. So the reason behind the trade war not being, the tariff is 12% effective rate, but the amount of goods at stake is much less because the rest of the world has been rewired, right? So will that continue? I think so, unless, you know, China really steps up the trade war, but they don't have an incentive to do so. On your other point, which is, you know, this resilience on the growth numbers, I think we can explain this with the AI boom. In the US, when you look at the non-AI economy, it's a flat line. And so this is also something that is there to stay. Will it continue with the same cadence? I'm not sure. And so that's something that will certainly be a bit the headwinds of 26, is that those drivers, the policy circumscription and the AI boom will not be as much there in 26. That's why there is more of a soft landing type of situation, right? In the prices at least. Yeah.
We've been focusing so much on productivity for AI. We're starting to hear at the margins companies saying, look, I'm going to hire less, and maybe that's because of AI, because they need less people, but also because we're just investing so much on some of these AI models. Does that come into play in the economy this year, or does it take longer to, you know, to look itself through?
Look, I think what is clear is that on the job market, for example, it's not AI which is in the driving seat. It's really more the need to continue to overperform market expectation when it comes to earnings. And so, because there is a big need for capex for AI, it's eating everything on its way, right? Including the slack that you were able to keep on your balance sheet as you were a corporate that has been very cash rich for the past 5 years, let's put it this way. So I think that's a bit the indirect effect of AI. On the productivity itself, I think adoption of AI is strong, but it's not groundbreaking yet. And of course, because it's very new, and if you listen to people that are very from Meta, it tells you LLM is only a very small part of what AI is going to bring. The non-language related change is yet to happen, and that will be much more ground in terms of productivity and displacement of jobs. This being said, there are sectors, especially in services, especially in clerk job, where I think you can feel already that for the junior hires, it's a dead hand right now. So we're going to have a bit of this polarization embedded in the job market that is going to be very strong. But for the rest, I think the economy is mostly driven by what are the margins of corporates today. They're still very strong and they want to keep them strong. And so to defend the margin, they're ready to cut a bit on the cost. And so that's a bit what the job market is seeing. In Europe, same thing. Germany, unemployment rate up. It's mostly because of the industrial recession. So everywhere I don't see AI, I see more this soft landing phenomenon being behind the job market softness, including in the US, to be fair.
Ludovic, what's your take on China? We saw some numbers, CPI numbers that were maybe a little bit better than expected, but are we going to still continue seeing deflation, which could be exported to the rest of the world?
Look, I think if it's not natural deflation, so driven by the confidence shock and therefore the real estate crisis and the fact that the real estate bubble pricked, and so it takes on average 8 years for a country to recover from that. And China is two-thirds of the way in, so there's still 2-3 years of strong deflation. But it's also organized deflation. We see that on the trade dumping. And as in Europe, we're really on the receiving end of that, and you can really see that prices have been pushed down. Really see it, I think, in the transition routes. So I think China, to a certain extent, for the better, is continuing to export deflation to the rest of the world. But there is an aftertaste, which is jobs at stake in Europe, for example. I think in the US it's less so, but I think in the retail sector in Europe, I mean, you see all the drama around Shein and so forth in Europe. This is a big issue, and so somehow people are happy because it's cooling down the inflation. I think energy prices are playing a much bigger role than China, but there is an aftertaste, which is this is continuing to displace a lot of manufacturing jobs, And clearly, Europe is not yet at the level of industrial policy engineering that the US is when it comes to protecting their jobs. And this is something that is very political in the union right now.
Ludovic, as always, thanks so much. Ludovic Sugrand, Chief Economist and Chief Investment Officer at Allianz. Now, coming up, we'll dive deep into the world of organized criminal groups and what the fall of Maduro means for geopolitics in Venezuela. All of that, much more to come with our next guest. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators, join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, U.S. oil bosses have been summoned to Washington as they come under pressure to return to Venezuela. All but Chevron ended their activities in the country when the late Hugo Chavez seized their assets in 2007. Bloomberg Originals has been looking at what sort of advantage that might give Chevron. Here's a preview.
The United States has carried out a series of strikes against Venezuela, announcing the capture of Nicolas Maduro and his wife.
Nicolas Maduro stood in federal court and pleaded not guilty to narco-terrorism charges.
Donald Trump said his military buildup in the Caribbean and destruction of civilian boats there was about alleged drug trafficking. But following the U.S. attack on Venezuela, another reason has taken center stage.
The oil business in Venezuela has been a bust, a total bust, for a long period of time.
Everything that we've seen during his second administration has been consistent with his view that the U.S. energy dominance is key to his agenda.
We're going to have our very large United States oil companies go in, spend billions of dollars, fix the badly broken infrastructure, and start making money for the country.
But one U.S. oil company is already there and has been for decades.
Chevron produces about 25% of Venezuela's oil today, is the largest investor in the oil industry and in the country.
We've been in Venezuela for the last 100 years. Our presence there, we believe, is important for the local economy, the regional economy, the people of Venezuela.
This is a story about the extent to which a U.S. oil company is willing to go through the trials and tribulations of geopolitics in order to stay in a country that has the world's biggest oil reserves.
Chevron has virtually no competition. It has no oversight. And so it's really a very unique situation.
So how did Chevron manage to stay in Venezuela when everyone else left? And what role could it play in the country's future if Trump gets his way?
Well, subscribers can find out that question by watching the documentary on the terminal at Bloomberg.com and the Bloomberg Originals YouTube channel. Now, President Trump said he's planning to meet with Venezuelan opposition leader and Nobel Peace Prize recipient Maria Corina Machado as soon as next week. With us now, Irene Villa, Latin America Senior Fellow at the International Institute for Strategic Studies. Thank you for joining us so much, Irene. When you look at what happens next in Venezuela, a lot of the focus, of course, is on oil. How difficult is it to have some kind of peaceful transition where the U.S. gets what it wants, but it's a good deal for the people of Venezuela, too?
Well, the short answer would be there are so many aspects to come together. So on the domestic side, let's say that clearly we haven't seen regime change. We have seen, if anything, regime configuration. So basically, it's really the same people in charge, with the difference that it's a very unstable, let's say, coalition of the three main powers, namely the now Putin president, Delcy Rodriguez, Cabello, the Interior Ministry, and the Prime Minister, Pedro Lopez. That's complicated internally, I think, because the president is actually not controlling the military. So she will need the help of Cabello, Cabello Lopez, who is now the defense minister. And clearly the dynamics, even in the past, among the three characters were already quite limited. So that's one. Second one is that clearly you have a very fragile security situation in the country. As we know, Venezuela has been many transnational crime and just not geopolitical transnational crime at the same, including its involvement in the Charters.
Yeah, we're also getting, so President Trump is writing on Truth Social, so usually it's around this time. He has said two things so far, saying that they canceled the second wave of attacks on Venezuela, and he's also saying that the U.S. and Venezuela are working well together. Again, what would be the best transition in a very difficult situation? So who do you see in charge over the next 4 to 5 months, and what does happen to that oil?
So I think from what we see, the current Chavista remaining government remain in charge. I think it has to stay within very clear parameters set by the US, which have to do with obviously opening the oil sector mostly to the US corporates, but also migration, I think is an important one, probably the repatriating more Venezuelan. You have the narco trafficking, which is obviously an issue, even if Venezuela is not central for narco trafficking dynamics towards the US, but more in general, it is important. And I think as long as really the government stay within those parameters, the US government will work with it. But as I said, there are a lot of spoilers, internal spoilers, and also more general organized crime spoilers.
I mean, if you're a Latin American partner right now of the U.S., what would you be thinking? Does the region become much more unstable given the Don Roe doctrine? What happens next? Do you think, Irene, that the president actually wants not more influence, wants the rest of South America?
Well, I think it's very clear that, in his kind of zone of influences, foreign policy, the Western sphere is basically US, right? It's part of the America First. So I think that's something that has been made abundantly clear. The problem, I think, for Latin American partners and in general for the region is how to react to that. I mean, at the moment we've seen not much reaction apart from kind of declaration. But then again, there has been different level of success. If you look at the case of Brazil, for instance, Lula has not actually gone down to Trump and still, tariffs have been removed. So I think it will depend really how close the country is to the US in terms of economic and political and geopolitical position.
What happens next for the war on drugs? I mean, is there any doubt in your mind, Irene, that this is about oil?
Well, no, it's, my mind has always been this is about oil, but I forget it's really about about oil because terms of war on drugs, right? Fentanyl doesn't come from Venezuela, it comes from Mexico. Cocaine also doesn't come necessarily through Venezuela to the US. I think 8% only is coming through the Venezuela route to the US. So clearly for Venezuela, it was about energy security.
President Trump's still going on, or still writing actually on Truth Social, saying Venezuela prisoner release is an important gesture. How critical do you think that this is for policy?
Well, I think it is probably something that needs to be seen within the transition, which, to be honest, at the moment, I don't think, especially from Trump, transition to a democratic elected government is a priority, right? So I think it's probably more of a rhetorical kind of declaration, and maybe comes more from Marcos Rubio.
When you look at, of course, right, you know, a lot of the things that a lot of the oil majors, I imagine, in the U.S. would want is, again, political stability. Do you have any insight on what kind of deals or terms they could get, or is it still just up in the air because the situation is very fluid and there's just also very rudimentary infrastructure to get the oil out to other countries?
Yeah, I mean, I think all these factors are important, but also I think what is if I were a corporate, what I would look at is also the state of the legal certainty, right? Because at the moment you have lots of investment from China and from Russia. There are contracts there for oil and also for natural gas and other resources. So what happens to this contract? And more in general, what happens to the contracts which are now, say, established with new corporates, right? Are they going to be valid once there's a new government? What is the status? I think it's a bit uncertain for corporates to say.
Yeah. Irene, thank you so much for joining us. Irene Miani, our senior fellow at the International Institute for Strategic Studies. Coming up, we'll talk to Dwayne Lysite, a co-head of the M&A at JP Morgan, as global deals top $5 trillion in 2025. So what does that mean for momentum? That's next, and this is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
That's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. You know, I'm fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers,
London, and these are your top stories. Glencore jumps after confirming that it's in talks to be taken over by Rio Tinto in a mega merger to create the world's biggest mining company. Now, the U.S. president says he plans to meet Venezuela's opposition leader as soon as next week, as the U.S. military prepares to hit drug cartels on land. Plus, TSMC, the go-to chip maker for NVIDIA, reports better than expected sales, reinforcing hopes that global AI spending can be sustained. So, deal makers closed out 2025 with a staggering $5.1 trillion haul, the second best year on record, with huge takeovers across a number of industries. Now, many advisors anticipate that 2026 could set a new high for M&A as Wall Street optimism persists despite brewing trade tensions and, of course, talk of a market correction. Gwen Lysite, co-head of EMEA M&A at JP Morgan, joins us now. Gwen, thanks so much for joining us. I always look forward to our chat at the start of the year because it gives us a good indication of why people would be merging. Like, is it to create value? Is it desperation? Is it just that bigger is better?
Well, first of all, thank you for having me on, and great to see you, and Happy New Year to you. Bigger is better. I think there's 2025 is a year of the return to the mega deals. We had probably about 40 in 2024 globally, 71 last year, and a record level of volume. And that really drove your 5.1 trillion up from 3.6 trillion in 2024. We see that continuing, Francine, for all the reasons you say. It's not scale for scale's sake. I think the market is rewarding focus scale, so the right type of scale. But it's also down to the synergies that can be created, the opportunities, the innovation, the attraction of top talent into bigger, more dynamic businesses. They're the drivers.
There was an issue before about valuation, right? That people said, we want to merge, but actually you're expecting too much, and I think you're worth less. Has this, is there a better match now because of some of the stress we're seeing out there? It could be geopolitics or just people feeling a little bit more anxious.
I think valuations in some ways have settled, allowing, or steadied if you like, allowing people to strike kind of better combinations. The use of stock is on the increase versus cash, which does help you bridge that valuation debate. But I think more than anything else, I think there is a focus on trying to look for the long term and looking for those opportunities. And in that way, it does help you bridge that value divide.
What does Rio Glencore tell you?
I think it's back to that kind of the mega deal trend that is there for the right reasons in terms of seeking the right type of scale. But it is a continuation of the theme last year. I think that's going to continue into 2026 and potentially beyond, as people are looking for opportunities to expand their business globally or otherwise.
Will it touch defense companies? I mean, again, it's strategic, but they're actually quite small in Europe. So if you had one big one, maybe they'd have more weight.
I think you've got the geopolitical overlay on that in terms of every government will have its own view as to what it needs locally or otherwise. So I wouldn't try to predict what happens there, but you have to suspect that there will be consolidation on a country-by-country basis or within specific regions, depending on their alliances.
But is Rio Glencore, this is about copper, so does this go back to geopolitics, or is it AI? Both?
It could be both. I think we're going to see more of that type of deal in terms of scale transactions.
So in what sector?
If you look at the sectors last year in 2025, tech-led, industrial, followed healthcare, and consumer retail. They're probably certainly 2 or 3 of those are my top choices, particularly tech and industrials. Combined, they're over 42% of global M&A value. And that's where the bigger deals are getting done. And that is what has driven this real rise. That will continue in 2026, we suspect. Whether it goes in beyond that is another matter. But you have to see tech. It's at your AI point. Where is that AI money getting spent? Do you need to consolidate to really be the leader in the long term in that area?
I mean, I know I'm oversimplifying, but there's good M&A or bad M&A, right? So there's good M&A when you say, look, we want to be better, we were stronger together, and then there's bad where you think, actually, I'm in a spot of trouble, I'll be better under a bigger umbrella. What kind of AI deals do you see? Because I hear a lot of, when you look at valuations, people say there's going to be maybe a washout, and the big companies that will be fine no matter what in AI will smaller ones?
I think you see that in every developing sector historically. I could take you back to, well, 99, 2000, 2001, 2002, expansion of the internet age, and then slowdown, and then the consolidation. I would say that's probably happened in most industries over the long term. Do we expect it necessarily to be any different with AI? Potentially not. Let's see. I'd love to be able to predict it as well, but I'm just not that good, I'm afraid.
I know you are very good. Are there more companies that try to go private? Will there be more in Europe, especially, which has been slower than the US?
Yeah, I think there will be. Europe had a good run of take privates last year, and it was a global trend, as you say. We think that yes, that will continue. We see real value in Europe, and I think that is the opportunity there. Maybe a undervaluation in public markets provides the opportunity, particularly if as growth rates, and we expect growth rates will start to rise. And I think people are getting ahead of that. Buying businesses at the right valuation with growth in the future, I think, is actually a great opportunity. So expect more.
Cross-border? I'm glad you're sitting down, because cross-border, are we actually going to see cross-border consolidation?
We saw quite a bit of it last year. And when we looked at the numbers,
I need to sit down.
When we looked at the numbers at the end of the year, we were probably surprised by how much cross-border there actually was. It was a major driver of those labor projects. If I look at the 71 deals I called it, about 18 of those or so were actual cross-border deals of proper scale. And that tells you kind of where we are. People are still thinking globally. We need that global franchise. And as much as we talk about deglobalization, it's actually continuing in terms of the globalization element is continuing in M&A. These companies need to have a global footprint. And there's some great value opportunities out there.
Well, are European companies looking for the US? We've seen again the wave, right, because of politics and the Trump administration is often invest a lot more in the US. I think they're also thinking, some of the coffee producers in Europe are saying, I need a base because that will keep everyone happy and I can touch that consumer. We're going to see more of that in 2026?
I think we are. Actually, it's going to be a continuation of 2025. We saw quite a bit in terms of the cross-border EMEA, say, into North America was actually very strong, and vice versa. And the leading countries are the countries you'd expect. The UKs of the world, France, Germany, etc. We see that again as a trend. Interesting trend is how much is actually coming from APAC as well, and the Middle East. So markets are evolving and developing and becoming again that more global, internationalized.
Dwayne, thank you so much for the terrific update. Dwayne Leinfeld there, co-head of EMEA M&A at JP Morgan. Now, TSMC's revenue has topped estimates, reinforcing hopes of sustained global AI spending in 2026. We're just talking about that, despite concerns about an industry bubble. The go-to chip maker for NVIDIA reported a roughly 20% rise in December quarter revenue, based on calculation from monthly figures. Well, Charles Schrum, a technology analyst at Bloomberg Intelligence, joins us now. Charles, thank you so much. So what's driving the sales?
I think there are two reasons behind. First, I think obviously is because the NVIDIA's AI chip demand is ramping up the shipment of the new Blackwell AI server in the second half of this year. That drive a lot of the orders both. And another actually unsung hero actually is from Apple. Apple's iPhone sales is actually quite strong, especially its iPhone 17. There's a great traction in China market. Our numbers showing that actually it has grown more than 35% in the first 2 months of the fourth quarter, actually gaining back some of the market share from local competitors like Huawei. So that's actually another reason for the strong sales growth for TSMC this in fourth quarter.
And is this growing trend likely to continue through 2026?
Yes, we believe that's definitely the case. So when we're talking about the revenue trend, we are looking at the wafer shipment, the volume, and also the pricing. So for the volume, actually, it's not just the NVIDIA AI chips will drive the volume growth. It's also the other AI chip makers, besides like Google, Qualcomm. These people, they are also launching the new AI chips, and that actually is demanding more leading-edge nodes from TSMC. But also one thing maybe not many people are aware is actually these days that the AI chips is getting bigger and bigger. That means more wafer volume now for TSMC. And another reason is actually the pricing. Actually,
the first quarter now, it spent almost $8 billion in cash in the first 9 months of the year. And this month's episode of Bloomberg Tech Europe has been taking a deep dive into AI's impact on the music industry. The technology has been used for everything from generating melodies to enhancing vocals. But there are concerns that AI models have been trained using copyrighted music without compensating the owners. Tom McKenzie spoke exclusively with the Grammy Award-winning artist will.i.am about why he sees AI as a new renaissance.
The artists that are protesting licensing of copyrighted music is possibly a solution for these AI models that are training. And so far, a number of them are trained, the allegation is, a number of them are trained on copyrighted music without compensating those artists. And licensing could be the solution.
Licensing is a solution. But what is the value of those recordings and those copyrights? So that's the heavy one. We licensed our music to Spotify. They don't value it the way that it should. And that brings upon another conundrum. A song is worth how much? A stream. So you can license it, but let's hope that the folks that are divvying up its value and its worth love it and appreciate it and price it for what it actually costs. As far as time. But the model is getting better and better and better.
McKenzie for Bloomberg Tech Europe. Now, Donald Trump's trade advisor has told Bloomberg that he thinks American industrial breakthroughs will eventually end China's dominance of the rare earths market. Peter Navarro says it's only a matter of time before Beijing's monopoly is over, and he's been speaking to Bloomberg's Michelle Hussein.
It's saying basically, we're going to do what we want, and if you try to stop us, we're going to take away your critical minerals. Because they think they have a monopoly on it. But that's just a matter of time. American innovation is going to quickly wipe away that innovation, that threat, that weaponization.
And you can listen to the full conversation between Michelle and Peter Navarro. Just search the Michelle Hussein Show wherever you get your podcasts. Now, coming up, we'll talk to Roland Rice, global co-chair of FGS Global, about how businesses can navigate a fragmenting global order. That's next, and this is Bloomberg.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
I think we have to earn that independence, and I think central bankers need to have time on their side, which is why most of them have long-term mandate and take decisions that have a target in the medium term, not in the immediate short term, because it's not going to work.
ECB President Christine Lagarde there speaking to me for the latest episode of Leaders with Francine Lacqua. It premieres today at 5:30 p.m. in the UK on Bloomberg TV. You can also watch it on the Bloomberg website and then on the terminal. Now, the post-war global order is fragmenting into spheres of influence as strongmen, leadership.
Yeah, which our report shows.
But Roland, there's a danger that a lot of people in charge actually don't mind the division as long as they get 51% of the popular vote.
Yeah.
So what does your report say in how this, where we end up in 1 or 2 years?
Well, so I think what the report is showing is that people are expecting significant different policies to come forward because they don't think what's happening. Fraying of trust is obviously going to affect businesses too, because people who are prominent in society are no longer having the same resonance that they had before. So you have to actually try harder to get your message across, and you have to be able to speak authentically, and you have to be able to persuade people that you aren't just making a profit or just employing people, which is good, but that you are actually doing something that's beneficial for society. I think probably the good news for the government is that the immigration numbers, which in terms of people who are concerned about immigration, have been a huge issue. But there are also people who've arrived, right? A lot of Americans have actually arrived because because they don't like Trump's world, and so we're getting that type of boost. I think the taxation thing is sometimes overdone. There are some prominent people, quite often in private equity, who leave for taxation, but do people really want to live in Dubai? It's a lovely place to go and visit and do business in, but not necessarily actually leave London, which is, after all, the cultural centre of the world and one of the great business centres of the world. So I think that might be slightly overplayed.
Roland, when you look at, we're running out of time, but actually you also talk about this fierce battle for the future. I mean, this is energy. We've lived through this week. Do you see, this big, fossil fuel versus clean energy, fighting this year, or is it more just about access to natural resources?
I think it's going to be more access to natural resources. Interestingly, in the report, people still see the issue of net zero as important, but they don't see the issue of environmental energies. They're just a little bit concerned about net zero because it's got a slight political tinge to it. But I think on renewables, people will support it.
Roland, thank you so much for joining us. Roland Rudder, the chair of GS Global, with this new report just out. Now, the U.S. Energy Secretary Chris Wright is on Balance of Power at 10 p.m. London time. That will be a good conversation on oil, Venezuela, and actually what comes next. So up next for us, it's Bloomberg Brief, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Tariffs, I think, are probably the first time in my career I've had to deal.
5-year, have to build a new plant from scratch.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
In New York City, good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. In cooperation, President Trump says the U.S. and Venezuela are working well together and says he has canceled a previously expected wave of attacks. The Supreme Court convenes. Markets keenly watching whether we get a ruling on reciprocal tariffs later today. And investors brace for a fresh read finally on the labor market, with the whisper number for today's non-farm payrolls at 66,000 jobs created in December. So markets look to be pricing in some risk at the moment. Futures are pointed higher. Yesterday the S&P finished flat. The Nasdaq was actually down 0.6% thanks to tech. The SOX index down 1.8%, although broadly defense companies did well and that sort of held things up. But we are still on track for gains for the first week of the year for the major indices. It's all going to come down to that non-farm payrolls report, and then of course any potential SCOTUS ruling on tariffs. Bonnie, some of its competitors also have listed write-downs for the rollback of their EV production, and this comes as the Biden-era green policies have been mostly rolled back by the Trump administration, and that EV tax credit came to an end last year. Lastly, let's head to the red-hot biotech space. Financial Times reporting that Merck is looking at a purchase of Revolution Medicines. The cancer drug maker is higher by nearly 16% in pre-market trade. Merck has been on a buying spree lately, trying to fill the revenue hole lost by one of its recent cancer medicines, losing patent protection. Revolution Medicines does have a market value of near $19 billion, so it would mark yet another blockbuster deal in the pharma space this year. Fine? Yeah, and the stock seeing that nice pop. Valerie, thank you so much. Valerie's hotel there in London. And coming up this hour, we'll count down to the payrolls report. Veronica Clark of Citi joins. But first, this just in the last hour, President
Trump has given an update on Venezuela, writing on Truth Social, quote, Venezuela is releasing large numbers of political prisoners as a sign of, quote, seeking peace. This is a very important and smart gesture. Because of this cooperation, I have cancelled the previously expected second wave of attacks, which looks like it will not be needed. Let's go to Washington now and speak with Bloomberg's Kasia Kimishinska. So, Kasia, did we know that there was a second wave of attacks planned for Venezuela?
Already a busy Friday here in Washington, D.C. President Trump, as you mentioned, posted on Truth Social just within the last hour. So we knew that the ships and the armed forces are in the region, that the U.S. is maintaining its posture, and President Trump says it will remain so, but there wouldn't be the next wave of attacks that he called expected, because he praised Venezuela for releasing prisoners, calling it a smart step. So this is another sign that Trump wants to work with this interim government in Venezuela. In the same Truth Social, President also mentions the meeting that he has with the oil executives here in D.C. today. That will be at 2:30 p.m. at the White House. Almost 20 executives coming over to discuss what Trump described as more than $100 billion of investment into Venezuela to boost its energy sector.
Yeah, and from what we gather, it's not just U.S. executives either, Kasia. It's going to be fascinating. Just on Venezuela, Trump meeting with opposition leader Maria Corina Machado next week, apparently. This potentially could signal trouble, no, for Delcy Rodriguez?
That was surprising. Trump mentioned for the first time yesterday in an interview with Fox News that Machado is coming here to D.C. next week, and he's looking forward to meeting her. Still, he has voiced a lot of skepticism about her